bilateral agreements. It's a core competency of the Commission. But speaking about the art of the deal, I think a deal can be made when it comes to the US-European trade relations.
Nobody covers the top global leaders like Bloomberg. Context changes everything. The top names in business are on Bloomberg.
We're making sure that we both get the bank to be more efficient and get it to be more simple. So that modernization and simplification agenda is very important. That also means investing. The transformation that we're doing is both addressing some of the regulatory issues that were raised, but they're also in the benefit of shareholders.
Nobody covers business like Bloomberg. Context changes everything. Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. Millions of passengers ride Flix buses each year, but please don't call Flix a bus company.
Flix is a global asset-light travel tech company.
CFO Christophe Debus leads a new business model transforming a traditional industry.
It's about affordable, convenient, and sustainable mobility.
Watch Chief Future Officer only on Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show, weeknights at 8 p.m. Eastern Time, right here on Bloomberg. Context changes everything.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
The top names in global leadership are on Bloomberg.
When it comes to tariffs, we need to be very clear. The European Union is negotiating as a whole, so there's no room to have bilateral agreements. It's a core competency of the Commission. But speaking about the art of the deal, I think a deal can be made when it comes to the US-European trade relations.
Nobody covers the top global leaders like Bloomberg. Context changes everything.
Live from the Bloomberg Business Week studio, it's a special edition of Bloomberg Markets The Close. Vonnie Quinn, can we call it The Close? Because, like, stocks close in an hour on this shortened trading day. Can we
Well,
do that?
if something gets closed and I can go home, then yes, we can call it The Close, right?
Hey, you've had a really busy day, and I want to talk about that because a big theme of our program today is going to be what's going on with retail sales. We got a great group of folks joining us over the next couple of hours here in the Bloomberg Business Week studio, here in the Bloomberg studio in New York City. But Vonnie, you were out since the wee hours of the morning.
I was out at 5 a.m. and it wasn't because I was shopping. Yeah, I wanted to see what was the story outside Macy's.
Okay, so what was the story?
So people lined up for about a half a block. It was really interesting. I wasn't expecting anybody to be there, and sure enough, people turned up. They may have thought that there were going to be massive doorbusters or huge amounts of gift cards. They were giving out gift cards, but not in the tons and tons of money that people were expecting potentially. But they would have got in and got whatever they wanted really fast. And then as the morning progressed, interestingly, it became very, very busy to the point where by 10:30 when I was leaving, it was actually almost uncomfortable. So the Black Friday shopping is very much alive and well.
It did feel like on the subway this morning, as I was coming in, there were very few people actually coming in to do any work. It was like you could tell a lot of international tourists and then people going to do some shopping.
Correct. I met tourists that had just come from the West Coast. They had literally just got off the flight. I met people from Turkey. They were all running in, and people were coming out with bags. They weren't just sightseeing. They were definitely coming out with bags.
All right.
But I'll tell you, the weather did play a role. It was very cold.
Black Friday, alive and well. Hey, we got a great program coming up. As I mentioned, we do have a group of folks joining us to talk all things retail. We got a look at macro markets a little later too. Kurt Wagner is going to be joining us. He's going to talk a little bit about everything happening in the world of Facebook, Meta platforms. Mark Zuckerberg making a little pilgrimage to Mar-a-Lago earlier this week to try to smooth things over with President-elect Donald Trump. We're going to check in with Kurt a little later in the program. In the meantime, taking a look at the markets, we actually are seeing records today for the S&P 500 and the Russell 2000. We're seeing tech lead the way, mega cap tech. The NASDAQ 100 not at a record, but still outperforming the S&P 500 today, up 0.8%. The S&P up 0.6%. The Russell 2000 up now by 0.3%. Let's do a little more on these markets to kick things off. Chuck Lieberman is the co-founder and co-chief investment officer over at Advisors Capital Management. He joins us this afternoon. Chuck, how are you? Happy Thanksgiving, day after Thanksgiving. How are you?
Very well. Happy Thanksgiving to you as well, Tim.
Okay, we knew it would be a little quiet today here, but we're still seeing records for the S&P 500 and the Russell 2000, at least a little earlier in the session. What do you make of the Black Friday trade today?
Well, I think the trend is very positive. The prospects of Trump coming in a couple of weeks means that various policies are going to change. They tend to be market friendly. And so in general, I see the market really having very little to overcome in the near term.
Chuck, will the president be very, very sensitive to market moves such that he reacts to the market and not the other way around? And is that a danger to the market?
It's a possibility, Vonnie, no question about it. But, you know, he's a very strong-minded individual. We all know that. And so we're going to see what he wants, and then we'll have to see what he can do, because not everything is going to be passed easily by Congress that is pretty close to even. He's got a small majority in the Senate, a tiny majority in the House. So he may have to compromise some.
Okay, let's talk a little bit about that. I have a few questions with regard to that. There's this idea that the markets are kind of going to keep the president-elect in check. And it's interesting because we've seen this sort of narrative play out over the past week, with Scott Bessent being announced a week ago today as Treasury Secretary, and then the idea of tariffs coming a few days later. Which is it for the incoming administration? Is it going to be sort of business as usual with a traditional Treasury Secretary and traditional advisors, or is Donald Trump going to go rogue with these tariffs?
Well, I don't know that I would call it a rogue, Tim, but I certainly expect Trump to push his agenda. And he can be a very forceful guy, as we all know. He's got some unusual views. He's got some very strong views. Bessent, I think, will go along more with him than he will go along with Bessent. Bessent seems to be more inclined to be a free trade guy, but he accepted the job of Treasury Secretary. I'm sure he had that conversation with the president, and I'm sure that Trump intends to push for some tariff increases, and he can do that on his own, and Bessent will go along.
Yeah, I guess, and the reason I say go rogue, what I meant was the idea of sort of, it's not necessarily the way that a lot of folks on Wall Street see as a key to economic growth here, because there are concerns that tariffs do raise prices for consumers. There are concerns that if we do see mass deportation here in the United States, that could be inflationary, you know, putting the humanitarian side of that aside, and certainly there's a big part of that. But there are a lot of questions about the economic policies that he talked about on the campaign trail, and whether those could be inflationary and actually could eat into growth.
Yeah, that's exactly right. And I do think they will be inflationary. So even if he swaps the promise of no tariff increases in exchange for something else, we are going to see a combination of some tariff increases and certainly more restrictions against immigration. And that combination is inflationary on both accounts. The labor market is fairly tight. Growth has been very strong. And the only way it was successful was is by so many people crossing the border and adding to our supply of labor and making it possible for firms to hire more workers. That means that if the supply of workers gets slowed down, we're going to see upward pressure on wage rates and higher pressure on prices. And the same is true, of course, for tariffs more directly. So I do think we are going to see higher inflation pressures. And the Fed, of course, has been saying all along that they still think they're on a path to 2%. It becomes harder to be on that path when these other things are happening.
Chuck, what do you make of the economic data right now in terms of what we're seeing with the consumer and in terms of, what's coming down the pike, savings, and whether the consumer is going to be able to shoulder everything that's happening?
Yeah, well, it's this thesis that the consumer was going to buckle and that was going to cause the economy to go in recession. That thesis is now maybe 3 years old, and it has obviously been disproven by the data. And I think the logic of the data supports more growth. As long as you have job growth, as strong as it's been, there's no way for consumers to retrench. What you saw in your shopping expedition this morning, Bonnie, fits that narrative perfectly. Consumers feel pretty good. And when you look at the debt data, for example, household debt relative to household incomes at lows. The stock market is at all-time highs. Housing values are close to all-time highs, although they've retreated a little bit. But the consumer is in very good shape, and therefore there's no reason to think that consumers are going to retrench anytime soon. And then you have the government trying to put money into green initiatives. Maybe Trump will reverse some of that, but nonetheless, the money is still coming in. Capital investment is strong. The cost of financing is low. So I think across the board, there's really nothing to hold the economy back.
So, Chuck, what is the biggest challenge to this economy and to the economic strength that we are seeing as you see it?
As I see it, it's inflation. We are going to see some increase in tariffs for sure. How much, we don't know. Trump is very transactional, and so he may offer Mexico some lower rate of tariff increase if they do a better job of keeping the borders closed. But there's no doubt that we are going to see upward pressure on inflation in my mind. The economy is still growing fast. People look at the slowdown in job growth, and they feel good about that because it means that maybe inflation pressures will moderate. But think about how successful you're likely to be if you tell a traffic cop you don't deserve a speeding ticket because you just slowed down to 100 in a 70-mile zone. You were going to even faster before. So we're still growing too fast. We're growing faster than the supply of labor can provide workers. And that's a problem. And we're seeing that, by the way, in these wage packages that are being negotiated by unions across the country in many industries.
Okay, so let's try to push this forward to a couple weeks from now when the Federal Reserve meets in December. I can't believe we're already at the last Fed meeting of the year, Chuck. I know that in our notes that you sent ahead of time, you said that the Fed made a mistake in lowering by 25 basis points during this month's meeting. Why do you think that was a mistake, and what do you think it sets up for December?
Well, I think it was a mistake because I think the prospect for higher inflation is very much in train. The Fed banked on the idea that inflation was coming down, and it had been, but for the last several months, it's actually been fairly stable. And we've seen some modest upticks, but effectively, it's flattish. I think there's some hopeful thinking, wishful thinking, that inflation is going to continue to moderate, and I don't see that basis. I think the Fed would be better off if it just simply said, we want to see more evidence, and we'll wait. And I think that's what they should do. On the other hand, it's clear that a number of them would like to lower rates some more. So I think it's a 50-50 bet, which is pretty much how the market has it priced right now.
Chuck, are you thinking about who takes over after Jerome Powell and the odds that Powell will serve out his full term?
Oh, I fully expect Powell to serve out his full term. He's made that very clear. I think Trump has gotten the message. I doubt they'll do anything that is troubling to force him out. So I don't see that as likely at all. And it's a little premature to think about who will come in to replace him. It wouldn't surprise me if Kevin Hassett is in the wings for that job. But nonetheless, it's early to do that. I don't don't look out quite that far for macroeconomic events. It's hard enough forecasting out 3 to 6 months, let alone a year or more.
Yeah, I think that's fair to say. I mean, look at where we were sitting a year ago. If we were talking to you, we'd be talking about, what, 6 to 8 rate cuts in 2024? Is that what the market was pricing in, something like that?
That's exactly right. And I thought that was unlikely. I kept on writing that I just don't see the basis for a recession, which is what the market was priced for. When you have an inverted yield curve for 3 years, it tells you the market is convinced that's coming, and you couldn't construct that story other than simply say, well, rates went up, and so the economy is going to go in a recession. That's kind of simplistic.
So where are the opportunities right now, Chuck?
Well, I think they're in some of the areas that represent tremendous value. I think when you look at the market, you can break down the universe into two not exactly equally divided camps. There's the Mag 7 and there's the disliked, unloved S&P 493. I think the values in the 493, there's a good case for some of the Mag 7, but I think it's a much easier case when you look at the rest of the market. I think the banks are still very, very attractive. They've done spectacularly well, but nonetheless, I think they're still cheap, and certainly with a different regulatory environment, with a healthy economy, with rates still at low levels, I think the banks are going to do very well. Energy is another area that I like. I have a lot of exposure, for example, to some of the oil and gas pipelines. If Trump does, in fact, do stuff to make it possible to do more drilling, that increases the supply. Somebody's got to carry that product. The pipelines will do well. So there are a lot of areas where there is plenty of opportunity.
Chuck Lieberman, Advisors Capital Management, it is always an absolute pleasure to speak with you. I hope you've been having a wonderful Thanksgiving and a good Black Friday as well, and speak to you soon. And Tim, it's fascinating, isn't it? The Trump trade is sort of back on today. You see Bitcoin higher, you see Nvidia higher, you see some of those old favorites. It's almost like, you know, even with this low volume, there are no new ideas, at least for now.
Do you remember a few years ago when Bitcoin was sort of in that earlier era? It was like, I think it was like 2017. Everybody went home and for Thanksgiving, and there was that cousin who was like talking your head off about Bitcoin.
Yes.
I wonder if that happened again yesterday.
And the taxi driver on the way home.
Yeah, you're like, the cab driver's talking about, everyone's talking about Bitcoin.
You know it's over at that point.
Hey, coming up next, we're talking a little bit about the consumer. We got a great guest joining us, Elias Sabo, CEO of Compass Diversified Holdings. Their portfolio includes everything from kind of lower end stuff all the way up to diamonds that cost hundreds of thousands of dollars. That's next.
The top names in business are on Bloomberg.
We're making sure that we both get the bank to be more efficient and get it to be more simple. So that modernization and simplification agenda is very important. That also means investing. The transformation that we're doing is both addressing some of the regulatory issues that were raised, but they're also in the benefit of shareholders.
Nobody covers business like Bloomberg. Context changes everything. Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. Millions of passengers ride Flix buses each year, but please don't call Flix a bus company.
Flix is a global asset-light travel tech company.
CFO Christophe Debus leads a new business model transforming a traditional industry.
It's about affordable, convenient, and sustainable mobility.
Watch Chief Future Officer only on Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show, weeknights at 8 p.m. Eastern Time, right here on Bloomberg. Context changes everything.
Welcome back to a special edition of Bloomberg Markets. I'm Tim Stanovic alongside Vonnie Quinn on this shortened holiday trading day. Got a lot of consumers out there hitting the stores for Black Friday, also maybe hitting their keyboards for Cyber Monday. So a big theme of our program today is going to be retail, understanding what consumers are doing, what they're spending money on, how they're thinking about the holiday this year, and especially how those executives are thinking about the holiday this year. It's a shortened holiday week between Thanksgiving and the next major holiday, so a little bit of pressure on these retailers. For more, let's bring in Elias Sabo, CEO of Compass Diversified Holdings. It's also known as Cody. Their portfolio is incredibly diverse. They've got baby accessories brand Ergo Baby, Lugano Diamonds. You can buy those for hundreds of thousands of dollars. They also do PrimaLoft. They work with brands like Nike, Montclair, Lululemon. So they got a great view of what the consumer looks like. Elias, good to have you on with us. Hey, I just wanted to get an understanding from you about how you think about this portfolio, because as I mentioned, you play in so many different areas. I don't see a big commonality between, BOA, the sort of innovative shoelace for snowboarders and cyclists, and then the incredibly high-end diamonds that can cost hundreds of thousands of dollars. What's the common thread that runs through these?
Thank you for having me on, Tim. The common thread that we have is our companies are all innovative and disruptive, and frankly, they align with our values. And so if you look at the companies that we own, we work with pretty much all consumer cohorts, from the wealthiest, as you said, with Lugano Diamonds, where our average ticket price is almost $500,000, to mass market shoppers, where you may be buying little wax cubes to make your home smell better. What is common, as I said, among all of these companies is a dedication towards innovation. And what we're seeing is when you have on-trend products that are very innovative, the consumer tends to purchase those throughout cycles, and in good and bad economic times. Now, we happen to be in a time right now where the consumer is extremely strong, times feel very good, and we've had record results for the entire year, posting double-digit revenue growth and EBITDA growth.
Vonnie, something's expensive when you go to the website and you click on it, and then the price says inquire. It doesn't actually
yes, inquire.
have the price.
I was completely distracted. I didn't hear a thing that Elias said after he said $500,000 worth of diamonds. Elias, that's
the average.
Really
it's the average.
Yes, the average. There is this idea, though, that we're now seeing some consumers be a little bit more choosy, right? So we're having the maybe people who earn $100,000 and more shop at Walmart, for example, which is not something we saw before. Are you seeing that across your brands? Because you do have a massive portfolio of the most expensive goods and, affordable goods.
We've been seeing that pretty much over the last few years. There's been a trend, especially with inflation, where consumers have had to make choices. Again, luckily, we have brands that are in the upper cohorts of income for our consumers. That consumer has generally stayed insulated, especially in the top decile or the top quartile, where most of our products are sold. That consumer has stayed very insulated and stayed in its channel where it has been. We have seen, however, a lot of the middle cohorts moving down, and I think that's a function of inflation. Inflation has hit everybody. As we know, necessities really grew in price, and it pinched a lot of discretionary purchases. The way to offset that is to start being more conscious in your spending pattern and your shopping. So we have seen that. Fortunately, that's only on a small portion of our portfolio. The vast majority of it, with the upper income consumer, continues to shop in its normal channels.
Well, because some of those items would actually be inflation hedges. I'm thinking maybe even diamonds, right, Elias?
Correct. In fact, one of the things that Lugano has done so well is by taking so much margin out of the entire supply chain for the diamond and jewelry industry, we're able to convey value to our consumers, and our consumers actually look at this product as part of a luxury collectible rather than just an occasion-based jewelry purchase. By being able to do that, we're able to obviously create things like inflation hedges and for that consumer, and also growth in a functional asset. So it's a very disruptive model. It's redefining how the jewelry purchase and where it sits in one portfolio should be. And as a result, we do think it is a great inflation hedge, especially if you get tariffs and other inflationary inputs that come out of the new administration.
How are you thinking about lab-grown diamonds? Because we're seeing a lot of pressure on the industry as a result of consumers, at least at certain levels, not necessarily caring where their diamond comes from, to the extent that we don't care if this is a naturally mined diamond or if this is one that's grown in a lab. I mean, look at the problems that Zales, for example, has faced. And I'm not by any means saying that, you know, where the price point that you operate in is there, but are you seeing similar pressures at the higher end?
Tim, we're not seeing pressures. In fact, to the contrary, pricing is holding up. One of the things you have to understand with Lugano is I would relate it much more to an art purchase or a rare car purchase than I would to a traditional jewelry purchase. And you can get replicas of famous art pieces from Van Gogh or Renoir, but you would never have a incredibly wealthy purchaser who would want to buy that. Our stones that are the centerpieces of most of what we sell are very rare and exotic. It could be blue diamonds or pink diamonds. These constitute less than 1% of entire diamond supply in the world. And our buyers look for authenticity in that. So we are not seeing the same pressures that you're seeing through the moderate price, traditional small white diamond market. Yep. That part of the market is seeing up to 50% price compression, and it's very hard to make up for that with volume.
I'm curious as to what your next acquisition targets are. We are, hearing time and again from bankers that, next year is going to be the year for M&A to really make a resurgence. And if that's the case, well, you'll be in the market probably, right? So where should we be expecting you to look?
Bonnie, we are always in the market. Unfortunately, over the last 2.5 years, it has been an incredibly weak M&A market. A lot has been made of the current administration and the FTC chair, who has been anti-M&A. That's for the larger transactions. Our transactions are typically in the $200 to $500 million range. And because they're platforms, they're typically not getting as much scrutiny. The problem has been with rates that have been rising and monetary policy, which has been tight, that stifles M&A, especially in the universe where we are, where we compete with mostly private equity firms. So we are hearing the same thing. Bankers are telling us that M&A activity is picking up. There's going to be pitches. They're doing pitches right now in the first quarter, and second quarter should be demonstrably better. I'd say in terms of what we're looking at, it goes back to what I started with. We look for innovative and disruptive businesses, but more importantly, businesses that align with our value set within the consumer, healthcare services, and industrial tech markets. Well, and we anticipate some of those companies coming to market.
Just really briefly, Elias, because we're out of time, but I'm curious, do you think Lina Khan will stay on? Will she be welcome under the new administration, given that J.D. Vance is pro-small business, apparently?
I couldn't imagine that in a million years. I think that this administration and Lina Khan's views are polar opposite.
All right. Thanks so much for joining us. Really do appreciate it. Elias Sabo, CEO of Compass Diversified Holdings. They got a huge portfolio all the way from those little innovative shoelaces that I use every day when I'm biking, these boas on my Specialized shoes, Lugano diamonds, which I think we spend a lot of time talking about. You use those every day too? Yeah, I don't use those every day. Did you notice the majority of our conversation was about those?
I did notice. It's only pink diamonds for me from now on.
Close to $1 million pieces of jewelry. They work with brands like Nike, PrimaLoft, and they got PrimaLoft too. So they got a great view of the consumer. Hey, speaking of a great view of the consumer, on the other side of this special edition of Bloomberg Markets, we're going to do a deep dive into the data that one company is seeing as consumers are opening their wallets and pocketbooks on this Black Friday. That's next on Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
The top names in global leadership are on Bloomberg.
When it comes to tariffs, we need to be very clear. The European Union is negotiating as a whole, so there's no room to have bilateral agreements. It's a core competency of the Commission. But speaking about the art of the deal, I think a deal can be made when it comes to the U.S.-European trade relations.
Nobody covers the top global leaders like Bloomberg. Context changes everything. The top names in business are on Bloomberg.
We're making sure that we both get the bank to be more efficient and get it to be more simple. So that modernization and simplification agenda is very important. That also means investing. The transformation that we're doing is both addressing some of the regulatory issues that were raised, but they're also in the benefit of shareholders.
Nobody covers business like Bloomberg. Context changes everything. Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. Millions of passengers ride Flix buses each year, but please don't call Flix a bus company.
Flix is a global asset-light travel tech company.
CFO Christophe Debus leads a new business model transforming a traditional industry.
It's about affordable, convenient, and sustainable mobility.
Watch Chief Future Officer only on Bloomberg.
We felt strongly that there has been an opportunity for there to be an experience on mobile that is centered around gamers. Like, we talk a lot about how there's 3 billion gamers in the world. 2 of those billion play on mobile, and half of those actually play on mobile and they play on another device. But there isn't actually a gaming platform and store experience that is centered around players and goes truly across device, where who you are, your library, your identity, your rewards, that travels with you versus being locked to a single ecosystem. And we've recognized that opportunity for a long time, but we wanted to make sure that anything we built was really grounded in people who play those mobile native games and the creators of them. And so being joined with a team that has real deep expertise in mobile was important to us.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
It is a special edition of Bloomberg Markets. Tim Stanovic and Vonnie Quinn here at Bloomberg headquarters in New York. And Black Friday is certainly underway. We got a great live blog on the Bloomberg terminal that's following reporters who are all over the country. Check it out because they're dispatched. Checking out the crowd, seeing what people are buying. Vonnie, a lot of people apparently in line to get the Taylor Swift book at Target. Did you hear about this?
I'm loving this blog because we're just talking to people all over the country at these malls of paradise and malls of America and all these different malls, and it's really fascinating. And yes, Taylor Swift merchandise is some of the best selling. But I saw it today. I was down at Macy's and I saw massive crowds coming in by 10 o'clock. And I think the weather had lot to do with it, Tim. So at 6 o'clock, there weren't too many people around. It was 29 degrees.
6 a.m.
6 a.m. when Macy's opened in Herald Square. But by 10 a.m., when it was a little bit warmer and, there was no rain, everyone had been stuck indoors on Thanksgiving because there was so much rain in the tri-state area, at least. People were out. They wanted to see what else, what are the discounts, what's available.
What did it seem like there were discounts?
It seemed like there were massive amounts of discounts. Everything was 40% off or everything was 50% off. But I have to say, one comment from our live blog really did strike me. This man that we spoke to, Jonathan Overton from DC, said, I don't really know what sales are going on, to be honest. There's not really a lot of signage. No one's really telling you what's happening. And I did feel a little bit like that because there was a bunch of merchandise and then, at the side a sign with 40% off and some small writing underneath. And it wasn't quite clear whether this was 40% off the sale price or the full price or, sort of a little bit of a grab bag. You get to the counter and you figure out what you're going to owe.
Okay, so we got the great anecdotes from 34th Street, where you were at Macy's, and from all over the country over on the live blog. We also want to get an idea for what data folks are seeing out there. For that, let's bring in Julie Van Ulen. She's Rakuten Rewards Chief Revenue Officer. It's a cash-back shopping platform. It's a subsidiary of the internet services giant Rakuten Group. Good to have you with us, Julie. Just give people an idea of the insight that you have with this tool, because if you're shopping online, you know about how you can use this tool. But just give people some insight into the real-time data that you get over at Rakuten.
Yeah, I'm happy to do that, and thanks for having me on this glorious Black Friday. Rakuten is a massive shopping platform with the best rewards out there, especially this time of year, but all year round, where we have about 5,000 brands who are working with us in order to attract the best shopping possible by offering rewards by way of cash back that are stackable on top of the amazing deals and promotions that are happening during big promotional periods like this. It's entirely free for consumers to join. We have about 17 million consumers today and growing.
And where are these consumers, Julie? Because obviously, we're looking today particularly at the US consumer, but Rakuten would have tentacles around the world, right?
We do. However, the business that we're discussing today and the rich data that we'll talk about in terms of what we're seeing from a consumer behavior standpoint is really a North American business, Rakuten Rewards.
So you say 17 million consumers sign up, and roughly on average, in a year, what kind of reward would a consumer expect to get?
Oh, it's entirely dependent on the shopper, right? It's a rewards platform that rewards a consumer for frequency and for average order value, right? So the more you buy, the more likelihood it is that the brands that you love the most are going to be paying attention to that and giving you more rewards to come back more frequently. So it really is engendering loyalty and frequency, and that's how the brands and retailers view us differently than what they can do on their own with their own base of shoppers.
So we're already starting, we're in the midst of the holiday shopping season, Julie, and we're already starting, even in recent months, to get some of those consultant reports out with how much they think consumers are going to spend. We talked about a Deloitte report out earlier this week that said that over the holiday period, and especially today, between today and Cyber Monday, consumers are expected to spend 15% more than they spent last year, $650. So a new record there. What are you projecting over at Rakuten?
It's been a really interesting year so far. I think that we are also projecting what would be a record year, both online and also growing in store sales. But I think that a lot of the data that we've been showing up until now over the past couple of weeks, as well as in yesterday and even this morning, speaks to a couple of really interesting trends that are specific to this year. The first one I would say is around consumer intent, that we see consumers browsing less but shopping more. So we see on our platform sales are up, average order value is up, but browsing is a little lower. So I think that speaks to perhaps the very intelligent consumer doing their research, making their list, checking it twice, and making sure that they are ready to pull the trigger when they see the best possible value, whether that value is by way of promotional discounts, cash back, free shipping, shipping, whatever it is, they're ready to go. And in tandem with that, I think it's also been a very buy now moment since the week after the election, which is to say that we saw a 57% increase in shopping the week after the election versus the week before. And that has continued where there's been a record amount of early shopping happening. So I think that, again, speaks to the consumer sentiment, perhaps the turbulence from an economic standpoint, and them wanting to ensure that they get in now when they feel comfortable that they've gotten the offer that's good enough for them.
Julie, you say you have a mound of rich data, and I'm just curious, who is the Rakuten Rewards signer-upper? So there's so many rewards programs out there now, and no matter where you shop, it seems like you're invited to be part of the loyalty program. What would the niche sort of offering of Rakuten Rewards be that would make me want to sign up for yet another program?
I think the really interesting part about what we do is that it runs the gamut of categories. So we aren't even just focused on traditional retail categories. We yes, certainly have the apparel, health and beauty categories that folks are so interested in buying this time of year, consumer electronics, but also verticals like travel, like consumer banking and financial products. So given the fact that it's a one-stop shop for being able to kind of weigh the value of what brands are willing to deliver across categories, it's particularly fascinating to consumers in a way that spans the gamut that a singular rewards platform might not be able to do.
Julie, what do you get out of the Rakuten Rewards program in the sense as a company? You have to entice people to use it. Do you get paid by the retailer, or is the data so powerful that you can then make money selling it?
That's a great question, and it's a very simple model. We are highly protective of consumer data, and we are in no way, shape, or form interested in using it for monetization. The model is entirely an advertising model whereby all of the brands and retailers with whom we work see our platform as a way to get access to shoppers who will shop more frequently and buy more when they get that cash back, which is effectively the permission to buy that they need. And when they give us those advertising dollars, just like any media platform that would get advertising dollars, we simply pass about half of those dollars back to the shopper in the form of cash back.
So we were talking earlier about the amount that somebody spends then dictating how much they get back in rewards, but you must have an average figure or even a mean figure for the Rakuten Rewards devotee, let's say.
It's a very tough one, I'm afraid, but certainly what I think it speaks to is the fact that it varies year by year and person by person. I did want to mention one more trend to you guys, which is super interesting this year, which is that we're seeing still to this moment, as we're monitoring real-time data, that there's this fascinating trend happening where it's a first me, then you season, and by that I mean shoppers seem to be shopping categories that are much less traditional giftable categories. They're very interested in areas like pet care, financial services, health and wellness, particularly CVS, Walgreens. So what we see is people out there, again, probably because of concerns around potential economic trends, they're saying to themselves, I need to get myself shored up with these deals and my family shored up first before I move ahead to think about gifting. We do predict that that's likely to change, shift over a little bit later today, especially as we go into the weekend and Cyber Monday. But it's a particularly interesting trend of consumers interested in using this moment of very high promotional, free shipping, cash back, stackability to do what's right for them and their family first.
Julie, one thing we talk about a lot is what retailers who are traditional brick and mortar retailers have to do to get consumers in the door, given that it's so easy to buy so much of this stuff online. What's the message that you have based on the data that you see, what consumers are doing online, to retailers who are trying to figure out this omni-channel approach?
It's a great question. Part of our business is an in-store capability whereby when a consumer links their credit card on our site, then you're able to achieve the same level of cash back that you might get online going in store when you use that credit card, and it just automatically happens. And that part of our business has grown dramatically year over year. And to answer your question, I think the reality is that we are dealing with a very value-seeking consumer who isn't just content with discounts and prices that a brick and mortar might be able to offer even during a time like Black Friday. They need to know that they're getting more. So a lever like cashback enables these retailers to offer something more that gives the consumer a permission to buy. What I will also say about retailers and brands is that there is certainly, and this is more just holistically as an omni-channel event, is that there is a democratization around where brands can be purchased by consumers. And by that, I mean, retailers are in a way starting to compete with the direct-to-consumer brands themselves that they sell in their stores, because those brands may be able to offer higher cash back, but they may have a lever to do things like free shipping with the larger infrastructure that they have. So it really is about figuring out what levers do you have and using them.
All right, Julie, let's leave it there. That's Julie Van Ulen, Rakuten Rewards Chief Revenue Officer, joining us on this Black Friday. Julie, thanks so much for taking the time. Always good to check in with you. Vani, did you travel for Thanksgiving yesterday?
No, I traveled to my couch, and then I traveled actually to a restaurant. I did.
Okay,
I traveled in the borough of Manhattan.
So, but you know, walk, take the subway. You weren't, going to the airport at all. Okay,
correct.
good.
No
airport. I was stuck in traffic. Well, I wasn't. I was just stuck in traffic getting out of the city. It was just wild. Every year I'm like reminding myself that you have to leave so early on Thanksgiving because everyone's getting out of the city on Thanksgiving Day. So we, a 90-minute trip turned into like a 3-minute trip or 3-hour trip for us, which was not great.
But lucky for you, you got to come back to the city before everybody else.
I did.
You beat the traffic.
The way back was only 90 minutes. I beat the traffic. Hey, speaking of travel, we're going to be checking in with the folks over at the Points Guy a little later in the program. One of the things I want to talk to them about is what corporations are doing when it comes to private travel. One of the most read stories on the Bloomberg terminal today is about Boeing, of all companies, pulling back on corporate travel in the sense of those private jets.
Well, what I found fascinating was it has its own private fleet. It has,
and they're not all Boeing planes.
Correct, Bombardiers and 737s. And you would think, if anyone is allowed to use private travel, it should be, a Boeing executive. And apparently the CEO always had to use the corporate just for security reasons. But the new CEO has decided, no, management does not travel. They travel economy in economy class on commercial airlines. And it is quite fascinating. It really is a drop in the bucket of expenses for them.
There we go, yeah.
But it's perception, it's optics.
I think you hit the nail on the head. According to Brian Foley, who's an aviation consultant quoted in this story, it's about $15 million a year for Boeing to spend on travel with the private jets. That doesn't put a dent in that $58 billion debt load.
No, but it is really interesting that, Kelly Ortberg is setting a tone. So he's saying, look, if management is not going to travel on these private jets that are sitting in basically, a runway, then you can't overdo it on your expenses. And it'll trickle down. I mean, there's 17,000 people getting laid off.
Okay, one person who is still flying private, Mark Zuckerberg. Little trip to Mar-a-Lago this week ahead of the Thanksgiving holiday. We're going to check in with Kurt Wagner, who covers all things Meta platforms and the company formerly known as Twitter as well. That's after this. You're watching and listening to Bloomberg Markets.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show, weeknights at 8 p.m. Eastern Time, right here on Bloomberg. Context changes everything.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
The top names in global leadership are on Bloomberg.
When it comes to tariffs, we need to be very clear. The European Union is negotiating as a whole, so there's no room to have bilateral agreements. It's a core competency of the Commission. But speaking about the art of the deal, I think a deal can be made when it comes to the U.S.-European trade relations.
Nobody covers the top global leaders like Bloomberg. Context changes everything. The top names in business are on Bloomberg.
We're making sure that we both get the bank to be more efficient and get it to be more simple. So that modernization and simplification agenda is very important. That also means investing. The transformation that we're doing is both addressing some of the regulatory issues that were raised, but they're also in the benefit of shareholders.
Nobody covers business like Bloomberg. Context changes everything.
You're watching and listening to Bloomberg Markets. On this Black Friday, President-elect Donald Trump had dinner with Meta CEO Mark Zuckerberg at his Mar-a-Lago estate on Wednesday. Zuckerberg meeting with Trump and members of his team as the president-elect prepares to return to the White House in just 52 days now. For more, we're joined by Bloomberg's Kurt Wagner. Kurt, do we know anything about the conversation? I know representatives for Zuckerberg did let out a few little comments.
They did. They were very vague. They said, that it was an important time for innovation, which is one of the things that they want to talk about. I think we can extrapolate from that a little bit to assume that they probably touched on AI, because this is something that's been a key priority for Meta over the past year and a half. They're investing very, very aggressively in all types of AI products and features. And as you can imagine, there's a lot of concern about what the incoming administration might do in terms of regulation with AI. So I do think, that hint about innovation to me is a sign that AI was probably at least one of the many topics of conversation at that dinner.
Maybe I'm a cynic, but my takeaway, Kurt, and you know this better than I do, was not that at all. I mean, my first reaction was like, Mark Zuckerberg's got to get on the Trump administration's good side, given what we've heard on the campaign trail. Now that Elon Musk is there nonstop, and we know that Elon doesn't have a great relationship with Mark Zuckerberg. These guys are like nemesis. I mean, am I too cynical here?
No, I definitely feel like there's a little bit of damage control being done here, right? And it's not just from the last couple months. I mean, remember 2 years ago, or I guess more than 2 years ago at this point, Donald Trump was suspended from Facebook and Instagram for 2 years, right? And that created a huge issue. Since then, when he was on the campaign trail, he talked about, wanting to keep TikTok around simply because he knew if TikTok was gone, it would help Facebook. He even insinuated that he might want to try to put Mark Zuckerberg in jail, right? That was just a few months ago. And so we've seen Mark Zuckerberg sort of in the last couple months since this summer, really, say flattering things about Donald Trump. He called the president-elect before he was elected back in the fall. Now he's showing up at Mar-a-Lago for dinner. I think your instinct is pretty spot on, which is that this has been a tumultuous relationship for several years now. And it's certainly in Mark Zuckerberg's best interest to make sure that Donald Trump, at the very least, thinks of him as neutral, right? So that he's not coming after him and attacking his businesses.
For sure. And he did make a comment after the assassination attempt, the first one, saying seeing Donald Trump get up after getting shot in the face and pump his fist in the air with the American flag is one of the most badass things I've ever seen in my life. So he has been quite, complimentary of the president-elect. What could the president-elect do, though, just in terms of the company, not Zuckerberg personally? He can blacklist him from Mar-a-Lago. He can do whatever he wants to Zuckerberg personally. But he would need someone like Alina Khan on board to actually hurt the company, no?
I think so. Well, it sort of depends on what you describe by hurt or what you mean by hurt, right? I think what we saw after the 2016 election was that Facebook really got bogged down with all of these claims of Russian interference and Mark Zuckerberg being summoned to D.C. every year to answer these questions. It's just a lot of distractions, right? I feel like that's the kind of world that Donald Trump and Congress could create for Mark Zuckerberg. They could just make his life much less enjoyable. Now, on top of that, as you guys mentioned, Elon Musk is in the picture, right? And Elon and Mark Zuckerberg are not friends. They have a very healthy rivalry. And so, now you have the president's sort of top advisor who's an anti-Facebook guy. And so I do think that there's this, potential threat that the administration could simply make Mark Zuckerberg's path these next 4 years very difficult if they want to. And so that's, again, why you see him showing up to have dinner the night before Thanksgiving.
Kurt, there's this idea, and we saw this actually play out a few months ago in the vice presidential candidate debate with J.D. Vance talking about censorship on social media platforms, and this idea of this anti-conservative bias. And I haven't seen these numbers in a while, but what we have tended to see is that actually Facebook as a social platform is really good to conservatives in terms of the most prominent voices. They get a lot of their traffic coming from the social platform. Is there any credence to the idea that there is anti-conservative bias on some of these social platforms that Zuck and company run?
I mean, gosh, Tim, we've been talking about this for years at this point, right? And I feel like it's always sort of been a perceived bias, right? I think no one's really come out and shown real hard figures to say like, hey, look, the companies are intentionally down-ranking someone simply because they are conservative or simply because they are liberal. What I find very interesting is that ever since Elon Musk took over X, certainly these past 6 months, he has been the most pro-Trump owner of any CEO, or excuse me, of any social platform we've ever seen. And yet there have been no concerns about that, right? There's been no concerns on the other side that, hey, what about, you're suppressing left-leaning voices or you're suppressing, Democrats, right? And so I just find it very interesting that for years we heard about this anti-conservative bias when there was a perceived attack. And now when we have a CEO and owner who's very blatant and openly picking a side, a political side, no one seems to have an issue with that, right? So it is a very interesting dynamic. I don't know, this narrative has sort of died down a little bit on the Facebook front, but now that Trump is back in office, I wouldn't be shocked if we start to hear this thing come up again.
Just briefly, Kurt, the representatives for Zuckerberg said that the conversation was taking place at a crucial time for U.S. innovation. I'm just curious, is there any chance that the two would have spoken about ByteDance and what Donald Trump should do about TikTok?
I mean, I'd be speculating, but it seems very logical that would be top of mind. That date, the January date for the potential ban of TikTok is just a few months away. Donald Trump talked about it on the campaign trail. We obviously know it matters a lot to Meta. Right? I think if TikTok is out of the picture, Meta stands to benefit more than any other company out there. So I do have to imagine that came up. It's probably a little bit of a tricky situation because Mark Zuckerberg has to sit here and probably, he can't say exactly what's maybe on his mind, right? For anti-competitive reasons. But again, the timing is such that it's hard to imagine it wouldn't have at least been brought up.
Kurt, thank you so much for following all of this so closely for us. That is Kurt Wagner, and we will be talking to him again, no doubt.
All right, Kurt, thanks so much. Hey, taking a look at the markets, we're seeing a day of buying for U.S. stocks here on this holiday shortened trading day. For more, let's bring in Jess Metten. She is Bloomberg News Deputy Team Leader for U.S. Equities. I always give her like this promotion whenever you're on, Jess.
Yeah, no, thank you. I like that.
That's okay.
We can go with that.
Well, give us an idea of why we are seeing some optimism today.
Well, also, volume is a big thing, too. So if you use the WEI function in the terminal, you can then look at AVAT, and that gives you a sense of where volume is. So right now, it's around almost a quarter lower than it would have been over the last 30 days.
So S&P 500 trading is 25% lower than the average over the last 20 days,
Roughly,
right?
Yes, exactly.
But that's not surprising, right?
No, exactly, because you typically see that.
We're the only ones here.
Right, we're the only ones, right. It was Paul Sweeney was here earlier with me where I was filling in for Tom Keene, but yeah, we were the only ones here this morning, so it makes sense. But I want to point out, though, small caps and Russell 2000, because not only is it the last trading day of the week, it's the last trading day of the month. So right now, if you look at that, up 11%, it just briefly intraday today crossed its closing high from 2021. And we saw that happen earlier this month too. It came just below that too, if you look at it right now in the GIPA function here, but it keeps running up against that resistance, but still trading around those all-time highs for the first time in about 3 years. Of course, when you do talk about the Russell 2000, you have to point out the amount of zombie companies that are in that index. So if you look at that in the terminal too, it's around 38%, so close to that all-time high that you would have seen with zombie companies during COVID. But it's very different than, say, the S&P 600, another gauge for small cap stocks. That has more profitable companies, so that's also been trading at all-time highs too.
That's fascinating. I wasn't quite aware of the number of zombie companies.
Right.
Jess, why is the market still on the same ideas? So today it seems like it's sort of a calm day. Therefore, Nvidia is up and Bitcoin is up.
Right. So a lot of that also has to do with what we've been seeing, because some of the chip makers have been higher, with some news coming out of Washington as well. So that's been moving. So if you're looking at like Applied Materials, Lam Research, those are gaining. Bloomberg News actually did a report that additional U.S. curbs on sales of chip technology to China may stop short of some stricter measures than previously thought. So that's why you're seeing a bid more in those stocks. And of course, when you think of companies like at Nvidia, which obviously the world's most valuable company, but then also it has a big hefty weighting. It's the biggest weighting, the S&P 500. It's up more than 2%. So even just 2% in a stock like that can really sway things higher.
Jess, 20 seconds left. The next catalyst next week that you and the team have the eye on.
So Fed Chair Jerome Powell is going to be speaking at the New York Times Deal Book Conference, and that's going to be next Wednesday. Next week's the last week we'll hear from them before the blackout week, before the Fed's decision on December 18th. So that's going to be really key for markets to gauge where monetary policy is headed.
It's been a phenomenal fall into winter, right? For sort of surprises and not knowing what's coming next, and a presidential election that looked like it wasn't going to be close, and then suddenly it was a completely close election. It's just been fascinating.
Keeps us on our toes, right?
Jess Menton, thank you so much for joining us in studio. Jess Menton of our equities team. She's deputy team leader there. This is Bloomberg Markets.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. Millions of passengers ride Flix buses each year, but please don't call Flix a bus company.
Flix is a global asset-light travel tech company.
CFO Christophe Debus leads a new business model transforming a traditional industry.
It's about affordable, convenient, and sustainable mobility.
Watch Chief Future Officer only on Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. It's the world's second largest economy, with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show, weeknights at 8 p.m. Eastern Time, right here on Bloomberg. Context changes everything.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
The top names in global leadership are on Bloomberg.
When it comes to tariffs, we need to be very clear. The European Union is negotiating as a whole, so there's no room to have bilateral agreements. It's a core competency of the Commission. But speaking about the art of the deal, I think a deal can be made when it comes to the U.S.-European trade relations.
Nobody covers the top global leaders like Bloomberg. Context changes everything. The top names in business are on Bloomberg.
We're making sure that we both get the bank to be more efficient and get it to be more simple. So that modernization and simplification agenda is very important. That also means investing. The transformation that we're doing is both addressing some of the regulatory issues that were raised, but they're also in the benefit of shareholders.
Nobody covers business like Bloomberg. Context changes everything. Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. Millions of passengers ride Flix buses each year, but please don't call Flix a bus company.
Flix is a global asset-light travel tech company.
CFO Christophe Debus leads a new business model transforming a traditional industry.
It's about affordable, convenient, and sustainable mobility.
Watch Chief Future Officer only on Bloomberg.
Well, there you have it. Look at that.
Market's closed.
Market's closed.
Can you believe it?
It's only 1 o'clock. It doesn't feel right.
Crazy.
You know, I used to do, was on the floor for a few years, the New York Stock Exchange, and this was the day that was so fun because Santa Claus visited.
Oh.
All the people, everyone brought
really?
their kids.
Already?
Oh yeah, already. People brought their kids. There was hot chocolate everywhere. Still not allowed to wear jeans.
Oh.
But yeah, those are the rules of the New York Stock Exchange. But the day after Thanksgiving, a very fun day to be there.
But hang on a second. Santa Claus, how could he visit in November? He hasn't even done his shopping or his elves making things or whatever yet.
You know, they're a little ahead of schedule.
Yes,
yeah. He's got the time,
I tell you what, I was surprised by the statistic that Jess mentioned earlier, that volume was at 75% of the 20-day average, because I would have thought that it would be even less than that. But that means that this has been a fairly healthy rally today. We had the Dow up 0.4%, another 188 points. The S&P up more than 0.5% at 6,032 now. We've long said goodbye, waved goodbye to that 6,000 mark. And then the Nasdaq was up 0.8%, Tim, 19,218.
So it looks like another record for the S&P 500 with today's close. And we didn't close at a record for the Russell 2000, but at one point in the day, we were at an intraday record, highest going all the way back to 1979.
Yes, and let's take a look at some individual movers now, because it was a very fascinating session. We had some of the usual Trump trade companies higher and some lower as well. And, you know, one was SMCI, which, you know, interestingly enough, it's been up, it's been down, but it was down 7% today on a day when, you know, some of the other chip companies were actually higher. Another 7% of a decline for SMCI. It's going to have to, you know, get that auditor working and get the market becalmed again. Let's put it that way.
Okay. Yeah. So look at that. You got SMCI down, what, close to 7%? What else was on your list of decliners today?
Yeah. So then I also had another chip maker, Micron, down another 0.3%. It was down much more than that, in fairness, a little bit earlier in the session. But this on the idea that perhaps, you know, there will be some curbs on chips going abroad, perhaps not as bad as expected, and maybe there won't be, you know, extra chips. But we have to remind our listeners and our viewers and everybody really that all of this is sort of forecasting. We don't know what's going to happen next year. We're still 52 days away from the inauguration. So whatever tweets go out, whatever ideas come to the fore, it doesn't mean it's going to happen. But I do want to mention one other decliner, and Tim, thank you for pointing this out earlier because it's a fascinating one. ADRs of BAE Systems. They were down the most in 2 years. Bank of America analysts downgraded the British defense equipment maker, and it's all because of Doge. I find it hard to say the Department of Governmental Efficiency without saying Doge. It could result in contract changes, though. So, you know, Bank of America is taking this department of Vivek and Elon Musk very, very seriously, and saying that BAE and other European defense stocks, which have rallied since early 2022, could lose out on contracts, and it might be time to sell.
All right, well, you got the decliners. I'm going to do a couple gainers, starting with Applied Materials. You heard Jess mention the idea of the chips up today. Well, semiconductor cap equipment makers rising after Bloomberg reported that additional U.S. curbs on sales of chip tech to China may actually stop short of some of those stricter measures previously considered. So you saw AMAT up today by close to 2%. Also, taking a look at Tesla, shares in the green once again today. I'm not so concerned about today's trade. I'm concerned about what happened over the last month for Tesla. Shares up close to 40% over the last month today, notching another 3.7% gain to the upside. And finally, taking a look at just a couple of retailers out there on this Black Friday, shares of Ralph Lauren. No news in particular.
You need to watch this if you struggle with getting your startup noticed. This Black Friday, seize the chance to shine. For just £200, you can showcase your startup to over 25,000 venture capital and angel investors. Submit a 3-minute video pitch and gain unparalleled exposure with your contact details included for direct follow-up. Your pitch will be broadcast several times daily for an entire month, ensuring maximum visibility. And that's not all. Your product will also be featured on our live streaming channel, which boasts over 100,000 daily views and broadcasts at least 10 times per week. Imagine the possibilities. Consistent exposure to investors actively seeking new opportunities. Venture capitalists provide large capital and strategic guidance, while angel investors offer early-stage funding and mentorship. This promotion connects you to a broad network, enhancing your chances of securing the perfect investment for your startup. Don't let this opportunity slip by. With just a small investment of £200, you can propel your startup to new heights. The submission process is user-friendly, making it easy for startups of all levels to participate. So what are you waiting for? Submit your 3-minute video pitch today and take the first step towards securing the funding and connections your startup needs to thrive. This limited-time Black Friday offer is your ticket to unparalleled visibility and growth. Act now and watch your startup soar.
Sort of the how to interpret market cycles in the aftermath of the pandemic, of course, and all the things that changed. 2 years ago with the inverted curve, we were all expecting that recession, and here we are with the economy remaining quite resilient, inflation, or at least the rate of inflation, getting closer to the Fed's target, although it is being more stubborn in the last few months with the core PCE now ticking higher to 2.8. But the earnings have come through, and that is the most important thing. You ask anyone at Fidelity in Boston at the mothership, it's price follows earnings, and earnings is what we are looking at. And earnings season, of course, is pretty much over. 9% growth year over year, and the growth rate for the calendar year will be around 10%, it looks like, this year. And expectations for 12 next year, that might come down a few points, but if we are getting into an animal spirits cycle after the fairly decisive election and a new capital formation cycle begins, and the AI boom already is sort of forcing all companies to go into the CapEx mode. The hope is, of course, that we get a true productivity boom. We'll have to see if it actually happens. But if that's the case, then you can get a higher sort of speed limit for the economy, which means the economy can grow faster without inflaming the inflation rate, right? And I think that is the great hope for this market. My biggest, not a concern, but I think one of the impediments will be next year that this is not like 2017, right? When the first term of the president started, and obviously we had the tax cuts happening in 2017. That year was a very robust bull market, led by both earnings growth and valuation expansion. But rates were much lower. The Fed was barely off of zero back then. Inflation was not a story. And in 2025, that is a different landscape. And so one of the things that I look at is interest rates. The 10 years behaved. It's 4.20. It was at closer to 4.50, and it was at 5% a year ago. And so far, so good there. But occasional flare-ups in yields, I think, is likely to be not a bull market ender, but at least an interrupter.
There's this policy proposal, or a series of policy proposals from the Trump administration that we got on the campaign trail, and I'm wondering how you're factoring that into your analysis. And it's the idea that, okay, if he goes through with these tariffs that he actually announced earlier this week, what could that do to inflation here in the U.S.? And then also, what about mass deportations? And whenever I talk about this, I say, obviously, the human can, the human side of the story, putting that aside and just thinking about the economic effects of deporting millions of people over a short period of time, many of whom do work in jobs here in the U.S. So I'm wondering what you're looking at in terms of economic shocks there.
Yeah, it is a concern, and of course, no one really knows whether the tariffs are going to be just a bat that the president carries around to try to get better deals. I mean, certainly the announcements with Mexico and then the meeting or the phone call with the Mexican president kind of give an indication that this is really to start negotiations for better trade deals. But it, of course, is a risk because if importers have higher costs, they either need to pass those on to consumers or it eats into their profit margins. And then it's a question of to what degree other things offset it, right? The dollar is very strong, so that would be an offset, for instance. So it remains unclear to what degree it would be inflationary. And of course, deportations would presumably be inflationary as well. And if you think about what the Fed and the economy has accomplished in the last couple of years, right, with the great rate reset in 2022, the Fed was trying to obviously slay the inflation dragon, which it has at least partially done. And it was trying to rebalance the labor market, which was in overdrive back then, right? Because the economy, when it shut down during COVID, obviously many people left the labor force. And then when it reopened, those people did not return right away. So there were lots of job vacancies that were unmet. Now that supply has returned, and immigration, I think, is certainly part of that. And so the labor market is in perfect balance right now. It has reset itself not through layoffs, but through people coming back in. If you start deporting people who are working in the labor force, obviously you run the risk that you then upset that balance.
Right, exactly. So if the market is only expecting 2 to 3 interest rate cuts next year, should it really be rethinking that in the sense that the Fed should possibly get in front of some of this?
Yes, I think so. So the Fed has cut, of course, twice, by 50 and by 25. I look at various iterations of the Taylor rule, of course, the rule made famous by John Taylor back in the early 90s. And no matter how you slice it, the Fed is in the right place, having cut rates a few times. Like the Taylor rule completely supports lower rates than they were. But going forward, it is by no means clear that a lot more rate cuts are in line. And of course, when we started this year, the market was expecting 7 rate cuts just this calendar year. And then a few months ago, when we had the growth scare, it was down to a 2 handle on the terminal rate. Now, we got a 66% chance of a rate cut in December. I think the Fed can go either way. The economy obviously is not falling off a cliff waiting for another rate cut. But my sense is that the Fed was right to do what they've done so far, but I would hold some more rate cuts in reserve rather than giving them to the markets and running the risk that you then have to take them back. Because I think one of the risks sort of economically is that, inflation went from 9 to 3 in 2022 to now. If you look at the CPI, the core PCE went from 6 to 2.8. So inflation is better than it was, but it's still above 2, right? And oftentimes the pendulum has to swing all the way through to stay at 2. So if the economy now reaccelerates at a time when inflation has not yet been slayed, you run the risk that that reaccelerates, and then the Fed is in a much more difficult position.
Yeah, I don't envy the job that Jay Powell has right now for many, many reasons. Hey, just finally, switching gears a little bit, $7 trillion in cash on the sidelines right now, at least in money market funds, as of just a couple of weeks ago. Where does that cash go and when?
I've been asked that question so many times, and my sense has been, so I follow this. Fidelity's one of the big players in the money market fund industry. So the way I look at the cash on the sidelines is I look at it as a percentage of the equity market cap. And as a percentage of the market cap, it's around 10.5%, which is exactly in line with the historical average. So there's a lot of cash, but equities are worth a lot. So how much comes out and can it move the equity markets is to me the big question. But the caveat with the mountain of cash thing is, like, for instance, during COVID, money went out of the stock market into money markets, earning zero because people were panicking. And so that truly was a flight to quality trade, which was then later reversed, of course, when the market was at a high, right? It came out at the low, comes back in at new highs, so it shows you the perils of market timing. This mountain of cash came out of the banks 2 years ago during, Silicon Valley Bank, and banks paying 0.5%. So there is some cash there, maybe $1 trillion, but it's not $7 trillion.
All right, Jurjen, we have to leave it there, but we got to the end of the answer, so thank you. That is Jurjen Timmer, who is Director of Global Macro at Fidelity Management and Research. Much, much appreciated. Next, we're going to speak a little more about those Mexico lines. Sheinbaum and Trump speaking. We'll be speaking with Eric Martin.
Morning, this is Bloomberg Daybreak Europe. I'm Tom Mackenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show, weeknights at 8 p.m. Eastern Time, right here on Bloomberg. Context changes everything.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
The top names in global leadership are on Bloomberg.
When it comes to tariffs, we need to be very clear. The European Union is negotiating as a whole, so there's no room to have bilateral agreements. It's a core competency of the Commission. But speaking about the art of the deal, I think a deal can be made when it comes to the U.S.-European trade relations.
Nobody covers the top global leaders like Bloomberg. Context changes everything.
Welcome back to this special edition of Bloomberg Markets. I'm Tim Stanovic alongside Vonnie Quinn here at Bloomberg headquarters in New York. We may be in New York, but we got a great team of reporters down in Washington, D.C., following everything that's happening, not just in Washington, but on the island of Nantucket, and of course down at Mar-a-Lago as well, because Mar-a-Lago is where the president-elect spends a lot of time. Nantucket is where the current president was for the holiday. Let's get to the latest from D.C. with Bloomberg reporter Eric Martin. Eric, I do want to go back in time just a little bit earlier in the week and talk a little bit about the conversation that President-elect Trump had with the president of Mexico, Claudia Sheinbaum, and get from you the different narratives that we heard from each of these folks, because we heard one thing from the president-elect about their conversation. We heard another thing from the president of Mexico. How are you reading into it?
Absolutely, Tim. This was kind of a shock on Monday evening when we saw President-elect Trump first post on Truth Social about the tariff threat for Mexico as well as Canada and China. And we saw Prime Minister Trudeau immediately on the phone with the president-elect. We didn't see President of Mexico, Claudia Sheinbaum, connecting with him until the afternoon on Wednesday. And then we got this readout on Truth Social from the president-elect saying, we had a wonderful conversation. Mexico has agreed to close its border. Essentially, everything's great, and this completely different tone from what we had seen just 48 hours earlier. We later saw a readout from the Mexican president saying Mexico does not agree with closed borders. We are trying to address the migration issue through a humanitarian and a helping hand to the people who are coming, and to treating it in a very humane way, and through collaboration with the U.S., through finding jobs and opportunities for these people, And so, very different kind of description from both of these leaders as to what was agreed and what was understood by each side from the phone call that they had on Wednesday.
Eric, you've spent a lot of time in Mexico. You've also spent a lot of time on the trade beat, so you understand how these things work. Tell us a little bit about her approach, because she seems to be mirroring Trump just a little bit in more recent days, bringing people on stage with her, for example, and saying, we have a plan too, and, the US will be hurt just as badly, if not worse, from the imposition of higher tariffs.
Absolutely, Vani. What we saw on Tuesday in terms of the initial reaction from the Mexican president was a message that I've really heard described by some Mexican officials as aimed at a domestic audience. This message was about defending Mexico's national dignity and pointing out that Mexico is a sovereign country, that Mexico has leverage. It's not just the U.S. that has leverage in this discussion, and that, as the president of Mexico said, if the U.S. applies a tariff, it will be followed by another tariff and another by each side, and you'll develop this trade war, which ultimately is not to the benefit of either side in terms of economic self-interest. Now, obviously, that was what the Mexican president said. That's not a message that necessarily historically has always been one that has registered with President Trump in the first term in terms of trying to just inform and highlight statistics and the way that, what the actual numbers are saying about the problem. Because if we're looking at the numbers, the number of people arriving to the southwest U.S. border is currently, in recent months, has been at the lowest that it's been throughout the Biden administration. It's about 100,000 people per month, which is down about 66% from December of 2023, before Mexico made a greater effort. So Mexico highlighting in part they've already been making an effort. It's been lowering the numbers and trying in part to use such an information campaign and the persuasion campaign to point out to President-elect Trump the damage that the self-inflicted wounds that it would be for American consumers, people who buy things like pickup trucks. The Mexican economy minister talking about the price of pickup trucks rising $3,000 per vehicle on average if these tariffs were imposed.
So break that down a little bit for us, because when that was announced earlier this week, or I think the president-elect posted on Truth Social about it, we did see shares of Ford take quite a hit. Shares of General Motors moved lower as well. Given your experience in Mexico, also your experience in Washington, D.C., what does our investing audience need to understand about the path of consumer goods that are at certain points built in Mexico and then shipped to the United States? Like, what does it look like as a trade partner?
Well, Tim, when I was covering the USMCA negotiations or the NAFTA renegotiation in Mexico in 2017 and 2018, part of the challenge is just the kind of mental gymnastics and math needed to figure out even how do these tariffs work when you have something like a chassis for a vehicle that, passes across borders several times in the manufacturing of that vehicle. And so you've got factories in South Carolina, in Alabama, in the U.S. South, or even in Michigan, where parts and where a vehicle during assembly crosses the border several times. And so there was a question back then about, well, does the tariff get applied each time that, that the vehicle is passing through? How do you even calculate this? And so fortunately, at the time, cooler heads prevailed, and the U.S. did not withdraw from NAFTA as the president had threatened during the campaign in 2015-2016. He sat down with the governments of Mexico and Canada and essentially renegotiated NAFTA, even though he's touted USMCA as a new deal. Everybody involved with it recognizes that it leans heavily on and contains a lot of the concepts and the agreements from NAFTA from the early 1990s, although updated to today's reality. So we've got a renegotiation of the USMCA that by law, as part of the USMCA, actually revision is supposed to happen by mid-2026. Each country's been debating exactly what that looks like, how deeply do they renegotiate, but President Trump making clear here, even 2 months before he gets into office, that he wants to see a lot of changes to the agreement that his own administration negotiated just 4 or 5 years ago.
Eric, I'm just curious because, Monterrey is really not very far over the border, and that's where a lot of factories are, including Tesla factories as well. How much of a chill is running through that city right now?
Well, Vonnie, certainly for the entirety of the Mexican economy, as Tim mentioned, the number of leaders who were flanking President Sheinbaum on the stage at the morning press conference at the National Palace on Wednesday morning. And I've been to Monterrey. I've spent a lot of time there, and I can tell you there are people whose livelihoods have been improved by the economic opportunities that have been made available to people in the north of Mexico in recent decades. Monterrey has the Tec de Monterrey, which is considered kind of the MIT of Mexico, that is graduating hundreds or thousands of engineers every year, many of whom go to work on some of these assembly lines. So the biggest thing that I think people there want people in the U.S. to understand is it's not just low wages, it's not just a wage differential, even if that's part of it, but there's also a highly trained and highly educated workforce, particularly in the north of Mexico, that has been integrated into this regional economy, trading more than $1 trillion a year between all of the three countries in North America.
Hey, Eric, before we let you go, just in the last minute that we have with you, there's a big profile of Robert F. Kennedy Jr. in the New York Times that I anticipate a lot of folks in D.C. are going to be coming over the weekend, talking a lot about his past, troubles that he's had with the law, troubles that he's had with alleged infidelity in marriages, and how he really got to where he is today. Now that Matt Gaetz is no longer up for his post, how do you anticipate the nomination or the confirmation process goes for folks like Robert F. Kennedy Jr. and Pete Hegseth?
Well, absolutely, Tim. I mean, this is something that we've seen in several of the Trump administration appointees and nominations to this point, is questions about their personal life and their history. Certainly the 53 senators that the Republicans will have in that chamber when it comes to confirmation time help to create a little bit of space in terms of potential to lose a couple of votes and still get somebody through the nomination process. But this is something that will be watched closely in terms of how the personal lives and the history of some of the people who are up for cabinet posts gets reflected and what comes out between now and the nomination confirmation hearing.
Eric, we got to leave it there. That's Eric Barton out there in D.C. Coming up next, more retail.
The top names in business are on Bloomberg.
We're making sure that we both get the bank to be more efficient and get it to be more simple. So that modernization and simplification agenda is very important. That also means investing. The transformation that we're doing is both addressing some of the regulatory issues that were raised, but they're also in the benefit of shareholders.
Nobody covers business like Bloomberg. Context changes everything. Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. Millions of passengers ride Flix buses each year, but please don't call Flix a bus company.
Flix is a global asset-light travel tech company.
CFO Christophe Debus leads a new business model transforming a traditional industry.
It's about affordable, convenient, and sustainable mobility.
Watch Chief Future Officer only on Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show, weeknights at 8 p.m. Eastern Time, right here on Bloomberg. Context changes everything.
Behind the bright lights and adrenaline of pro sport is an equally exciting world of negotiations and deal making. That's what we cover each week on our podcast, The Deal. I love the fact that you have, we say the cojones, can't say that in Bloomberg.
Maybe moxie?
Yeah, moxie. I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all-stars like Billie Jean King.
Well, what should I learn? What should I do? I said, learn the business.
Jay Williams.
You're an asset, but how do you become the principal?
Paul Rabel.
We're going to be the league of digital, and that's why you're going to invest.
Adina Friedman.
I definitely am competitive.
David Rubenstein.
People don't come up to me on the street and say, let's talk about this private equity deal you did recently. No, nobody does that. They say, let's talk about the team.
And so many more.
You need a clap?
No, I didn't.
Go.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
This is Bloomberg Markets this Black Friday with myself, Molly Quinn, and Tim Stenovic. Ready, set, shop. Black Friday, one of the most popular shopping holidays, as we know. The National Retail Federation saying almost 132 million people are planning to shop just today alone. That's not even the whole weekend. Joining us now to talk retail is Oliver Chen, Senior Retail Analyst at TD Cowen. He covers the retail and luxury sectors. And Oliver, if I know you, you were out this morning combing some shopping malls or maybe some high streets and telling us, preparing some things to tell us and to tell your clients. What did you see?
Yeah, Bonnie, we were out at 7 a.m. and I'm always excited to be in the stores. Consumers this year are out and about. They're really looking for value. So big winners include Walmart as well as BJ's and Costco, and that's what we're watching. We're a little more cautious on department stores. There's some great deals to be had, but the shoppers being very selective and really looking for the best deals.
Are they finding them?
Some of the risk factors at this holiday season. In some places, what happened, Tim, is we've had a little tougher weather. The weather's been a little warmer. So I bought this shirt, apparel and seasonal goods and sweaters and outerwear. There are better deals to be had, and we think margins are going to be flat to slightly lower, given that this is true.
You know, Oliver, one of the people that we spoke to for our blog today was somebody who said that they really couldn't figure out what was going on. There wasn't a lot of signage, and the signage that was there had sort of small print. And honestly, I was in Macy's and Herald Square, and there was a lot of signs around, and there was a lot of 40% offs and 50% offs, but it wasn't quite clear how much an individual pair of shoes or boots or hat or shirt actually was. How are the retailers going to solve that problem? Have they not recognized that that is a problem?
Yeah, what you're speaking about makes a ton of sense in terms of shoppers wanting a better experience. So as we look more broadly, less can be more. Sometimes less inventory, fewer items, cleaner stores. Service is very important as well. Competition has intensified as you think about Amazon, the TikTokification of retail, how convenient everything is digitally. So the big problem here is getting people in the stores and offering great service. Retailers are on a journey here. This morning, we saw some pretty clear deals in terms of 30 to 40 to 50% off. Also, what happened this year was deals started earlier. So that was something that happened too. And in many cases, we noticed that deals were better online.
Really? Okay, that's interesting.
So that's what I want to know about.
We don't have the trend.
Don't have the what?
Yeah, I think it's going to be a lot more convenient. I mean, the future of retail is about everything everywhere all at once and being convenient. So it's really integrating this. And as we all know, mobile is so important as well.
Yeah, you got to drink every time someone says omni-channel, Oliver. Hey, I want to know about what was working so well today at Walmart, Old Navy, and Nordstrom, and why you and the team were cautious at Macy's and Kohl's.
we continue to be most impressed with Walmart. That's been our top idea for 2024, and you've known me for a while talking about this idea. At Walmart, you're getting everyday low prices, plus you're getting discretionary items. We also saw very good execution in televisions and the unit gains there, and Walmart's getting a wealthier consumer too. So we're excited about that. At Nordstrom Rack, they've done a good job really just getting a lot more attractive inventory in there. And as you know, the whole off-price sector has been very attractive as well. We're a little more cautious on Target. I'm hopeful for Target. I bought a lot of stuff there myself personally, but this retailer is going through different issues in terms of traffic. Overall, we're also excited about the beauty category at large. These have been hot items at Sephora and others. We noticed slower traffic at Macy's, so I want department stores to win. And the store looks pretty good and clean, but we didn't notice many people there, so it's something we're watching.
Yeah, by 10 o'clock, there was a good crowd, I will tell you that. The one in Herald Square, at least, Oliver, because I was there braving the cold, and it was freezing in the tri-state area. I got research for the show. That's all. I thought it would
anything
be
you buy, you
mixing
could expense. Come on.
and matching, you know, if I was to actually buy something. But yeah, next time I will, Oliver. But I am curious. You were talking about you know, Target and how you bought stuff there, and all of these other retailers like Walmart that are doing it right. What happens if tariffs are indeed introduced next year? Should shoppers be buying up the stores at the moment in order to get, you know, non-tariff or lower tariffed items?
Yeah, the answer is yes. If tariffs happen, it's a big worry and concern for the retail industry. For example, as we model it mathematically, this could hit earnings per share by mid to high single digit, 9% more hits. Also, a lot of this will have to be passed on to consumers. So that's going to happen. About a third of supplies, for example, at Walmart are acquired from abroad. So a big percentage of your cost of goods sold will be impacted. We'll see. The good part about this is retail's been through a lot of supply chain issues. So we're experience in terms of facing this and the need to move and groove. That being said, the consumer is stretched and feeling pain and only coming out for deals. That's negatively impacting Target too, because you're coming out for seasonal moments and deals. Otherwise, you're trying to delay, you're trying to save money. So we will watch this whole issue manifest, and consumers may or may not be willing to take these price increases, which could have the unintended consequence of inflation.
Hey, Oliver, before we let you go, help us look forward to Cyber Monday and the numbers that you're looking for. We already have some, numbers out from Adobe. We're going to be watching those closely. But what are you watching for?
Yeah, we're looking at a plus 7% growth rate. Our top idea is Walmart. They have the marketplace model. They also have digital advertising. So Walmart growing online in the double digits, 15 to 20% plus. That momentum can continue in part because of adding to the marketplace. So that's something we're watching. Also TikTok. Don't forget about TikTok and Shein and Temu. Unfortunately, these are taking share from traditional U.S. retail, and we need people to go to stores. I mean, I'm addicted to TikTok, but we need people to get back in stores.
But everybody else should get back in the store. Okay, well, Oliver, when you do it, we'll follow your lead. Oliver, thank you so much.
I love both, and thank you. Happy holidays. Happy Black Friday.
Happy Black Friday. Much, much appreciated. That is Oliver Chen, Senior Research Analyst at TD Cowen. And we know he loves both, not just TikTok, but also the U.S. retail stores.
Okay, so there is an app out there that allows you to earn Bitcoin while you shop. It's called Lolly. It's a rewards application. It gives you Bitcoin and cashback rewards when you shop online at one of the nearly 2,000 retailers they partner with. Includes shops like Macy's, Ulta Beauty, and many more. We've got Alex Edelman with us, the CEO of Lolly. Alex, good to see you this afternoon. How does this work? Because I've seen Bitcoin rewards programs in the past that have not certainly panned out. We can talk about why that is in a minute, but how does Lolly work?
Well, we've been around since 2018, so we've weathered a lot of different bull and bear cycles, and it's very simple. We partner with merchants, some of the biggest merchants in the world, and we give rewards when you shop online or in store at those merchants' sites or stores.
Right, but how do you price them? Because the price of Bitcoin is just a little bit volatile. So how do you decide how much of a Bitcoin you're going to give in rewards, and who pays you for that Bitcoin?
So Bitcoin is, divisible. It's called satoshis, is what they're priced in.
Yeah.
What we do is we give fractions of a Bitcoin. So it's a percent of every sale, upwards of 30% back, on average of 7% back per sale. And when you shop in-store or online at these merchants, you get that Bitcoin back. And so you get a Bitcoin wallet, and you can move that into any Coinbase account, exchange, cold storage wallet, whatever. Your Bitcoin is your Bitcoin.
The one that I was referring to was a little different. It was BlockFi's rewards credit card. BlockFi obviously blew up about 2 years ago during that crypto winter. How did you guys weather the crypto winter? And how did you see activity on the platform change depending on price?
Yeah, so we keep a very safe and it's a very different business model from lending out Bitcoin. So right. A lot of the previous cycles, they were taking Bitcoin and they were lending it out. And there's clearly a lot of counterparty risk when you do that, both in traditional finance and even more risk in crypto, decentralized finance. So what we do is very simple. We keep your Bitcoin safe. You're welcome to take it out. Your Bitcoin is your Bitcoin. Your keys are your keys. So we keep things very simple. We don't trade Bitcoin. We don't do anything like that. When you've earned $15 in Bitcoin, you get $15 in Bitcoin. So it's very, very simple. And our users have loved Lolly since 2018. Our merchants, have loved Lolly. We clearly have, some of the biggest merchants in the world, over 1,500 merchants and 50,000 stores across the U.S. And we have 6-7 years of experience giving people free Bitcoin since Bitcoin was at $4,000. So you can imagine how happy those users are.
Yeah. Not sure it's free Bitcoin, but we can get to that in a second. But I am curious, how do you get it from, one place to the next? Are you just the mathematician that does the fractions and then puts it in the other balance sheet? Do you have storage for these Bitcoins? Does it pass through your platform in some way?
We use a third party, secure storage, we keep it very safe for you, and we encourage users to transfer Bitcoin over to their accounts and to keep their own Bitcoin if they'd like, or treat us as they would in exchange to hold their Bitcoin for them. We keep it very safe and simple for people.
And is there a charge for storing it, or how does that work? And who is this third party?
We don't disclose our third party, but some of the most trusted third parties in the world that have been around for a very long time. We keep things very safe.
Welcome back, everybody, for another
on sort of
deep dive.
Bitcoin $100,000 watch at this point, and we've seen the price of the crypto move higher after it was clear that the president-elect would win the election earlier this month. Right now, Bitcoin's at just over $97,000 per Bitcoin. What do you think the Trump administration is going to do when it comes to crypto?
So we have a very Bitcoin and largely crypto-friendly administration coming in. And no matter what your politics are, we do see that this administration has been very pro-crypto throughout the election process, and even in the last 2 weeks since the election, what they've come out and said. So we are anticipating extremely favorable regulatory environment over the next 2 to 4 years. Gensler has already resigned. We're expecting
welcome back, everybody,
very
for another
friendly
deep dive.
administration to come in, and so I think the general sentiment across crypto companies. Less gray area. So what we've all asked in the space and what we've been so frustrated with for the last 4 years is that there has been no regulatory clarity, just complete gray area on what you can and can't do. So a company like us that just deals in Bitcoin, we've had a very easy
welcome
time.
Back, everybody,
but
for
other
another
companies,
deep dive.
have not. So what I think we're going to see is more crypto companies built in the U.S. The U.S. is going to be a hub of innovation with this new administration, and we're also going to get more clarity, which we're very much looking forward to.
We should note, SEC Chair Gary Gensler he's not out of the position yet. He said that he's going to step down from the agency in January, so he's still SEC Chair.
Yeah, no, exactly. So the fact that we're going to get a new SEC chair, or maybe more clarity, or maybe there'll be some court decisions, surrounding cryptocurrencies, doesn't mean the price of Bitcoin will go up necessarily. Do we need Michael Saylor to just keep buying it?
Well, I think I'm glad you brought up Michael Saylor. We've for a long time, both of our companies and personally, and I think we both have a very similar vantage point to what's happening right now. So we're seeing companies like MicroStrategy and countries like El Salvador set the standard for buying Bitcoin as a strategic reserve currency. And so, if you study basic game theory, you believe and you'll see that there will be more companies and more countries in 2025 that are adopting Bitcoin as their Bitcoin reserve
back, everybody,
currency.
for another deep dive.
And once
game theory
that snowball keeps going, once the snowball will the inflows will keep growing. We've already reached $30 billion in ETF inflows, and we're going to see even more inflows from countries and the biggest companies in the world.
You might want to be in the game.
We'll see what taxpayers think about a strategic Bitcoin reserve. Alex Edelman over at Lolly. Up next, travel.
The top names in global leadership are on Bloomberg.
When it comes to tariffs, we need to be very clear. The European Union is negotiating as a whole, so there's no room to have bilateral agreements. It's a core competency of the Commission. But speaking about the art of the deal, I think a deal can be made when it comes to the U.S.-European trade relations.
Nobody covers the top global leaders like Bloomberg. Context changes everything.
Okay, today I'm going to talk about how to succeed with a startup. Obviously, more than can be said here in 20 minutes, but I will do the best I can. The most important thing, the number one lesson we try to teach startups, is that the degree to which you're successful approximates the degree to which you build a product that is so good, people spontaneously tell their friends about it. Startups always ask us for the secret to success. They always want to believe it's something other than this, because this is really hard to do. But this is it. If you can build a product that is so good, people spontaneously tell their friends about it, you have done 80% of the work that you need to be a really successful startup. If you think about the most successful companies you know, Google, Facebook, whatever, you probably found out about them because a friend of yours said, you got to try this, it's great. So this is the bar. Something that people love so much they tell their friends about it. One important indicator for a product like that is a product that's simple to explain and easy to understand. If you can't explain in a few words what you do, and if at least some people don't say, oh, that's pretty interesting, that's usually a mistake. It's usually a sign of unclear thinking or a need that is not big enough.
I want a bank that shows me what I spend instantly.
We're Monzo. Give us a go. See?
I want a bank that can help me budget for the things I need, like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
Hi, I'm Laurie Haynes, CEO and co-founder of Shirar, and I'm really excited to tell you that we are going to be raising funds for Shirar again. After a successful raise in 2023, it's time to scale.
We hope that you enjoy the pitch deck and the financial model. Any questions, please don't hesitate to ask us, and we can't wait for you to be part of Shirar.
Okay.
It's this new mobile app that's been kind of making waves in the startup world.
Interesting.
Imagine if you're a startup founder, right? You have that amazing idea.
Right.
But actually getting investors to buy in, it feels like you're climbing Mount Everest.
Oh, yeah.
So SG Trader AI, this app, it might just be like your Sherpa.
Okay. Yeah.
We're going to be talking about how this thing helps startups make these awesome video pitches. The kind that really get the investors saying, yes, I'm in.
I see.
And we'll also look into what really makes it different from everything else out there.
Right.
So what's really cool about this SG Trader AI, I think, is that it's not just about making a video.
Yeah.
It's about giving you this like edge in the whole fundraising game.
I see.
It uses AI to like really look at your startup and make sure your pitch is spot on. Now, I have to admit, when I first heard about this Retrieval Augmented Generation Framework, or RA,
Okay.
I was kind of intimidated. To be honest, it sounds a little complicated.
Oh, yeah. It can sound that way.
Can you maybe like break that down for us? What is that in simple terms?
Okay, sure.
And why is it such a big deal for creating a killer pitch?
So imagine you're like a chef, right?
Okay, I like where this is going.
And you've got this amazing recipe book.
Yeah.
That's like your AI model, like ChatGPT or Perplexity, one of those.
Gotcha.
Your ingredients. That's your startups data, the latest trends, all that.
I see.
In Harji, it brings together that recipe and those ingredients to make this like totally unique dish.
Interesting.
And that dish, it's your pitch script.
So it's not giving like generic advice.
Yeah.
It actually understands your startup and what investors want.
Exactly. It knows what's going to click with them.
That's amazing. So it's like having your own pitch coach who knows exactly what each investor's looking for.
Right. You got it.
Now, this is where it gets really interesting, I think.
What's that?
We looked into some of the other video platforms out there.
Okay, yeah.
Competitors like Temi, Beautiful.ai,
Right.
Vidyard.
Right.
And, you know, none of them have this AI-powered script writing.
No, they don't.
It's like they're missing that secret ingredient.
It makes a huge difference.
From your experience, how big of an advantage is that for startups, especially new ones just starting out?
Well, for those early stage startups, it's a complete game changer.
Yeah.
Because they usually have limited budgets, resources.
Tough, yeah.
And putting together a really strong pitch, it's a big challenge.
It's huge.
It's like trying to convince someone to invest in your dream without having that perfect way to say it.
It's like, here's my dream, just trust me.
Exactly. This AI tool removes that whole hurdle.
Right.
So entrepreneurs can just focus on what matters.
Building their product, growing their business.
Exactly.
I totally agree. And, you know, speaking of making things easier, I love that this is a mobile app.
Oh, yeah. It's super convenient.
Like, you just need your phone. That's it. To make these pro videos. No fancy cameras, no studio rentals. You could be, like, at a coffee shop.
And still make it look awesome.
And make it look like a Hollywood production.
It's amazing, right?
That accessibility is key, especially for startups that are bootstrapping it.
It really levels the playing field.
Yeah.
So everybody has a chance to present a polished, professional pitch.
That's no matter what their budget is.
Right. You don't need a whole film crew to look credible anymore.
And it's not just making the pitch, is it?
No, there's more.
SG Trader AI, it takes it a step further. It helps you get it in front of the right people.
Exactly.
They have their own live stream channel with a massive audience.
I know, it's crazy.
Over 25,000 subscribers and 100,000 daily views.
That's huge exposure.
That's insane. Plus, you can instantly share your pitch with their network of, like, angel investors, VCs.
Yeah, it's great.
To me, that sounds like a shortcut to all that networking.
Yeah.
You know, trying to get in front of investors.
It can be a real grind.
What are your thoughts on that?
Well, it's definitely more efficient.
Yeah.
In the past, startups had to do all these networking events, cold emails, all that hustle.
It's exhausting just thinking about it.
I know, right?
So does SG Trader AI really streamline that?
It does. It gives you that direct line to investors who are actively looking.
They're already interested.
Exactly. It's like having a fast pass to the front of the line.
Love that analogy.
Mm-hmm.
So it takes out the guesswork and the legwork.
A lot of it, yeah.
From what I see, SG Trader AI doesn't stop there.
Nope. They keep going.
They put everything you need. Script writing, recording, editing, even reaching out to investors.
All in one app.
All in one app.
It's pretty amazing.
It's amazing.
It solves a big problem.
It does.
Think about it. Before this, you had to use all these different platforms and services.
To do each individual thing.
Yeah, just to get your pitch ready and seen by the right people.
A recipe for a total headache.
Especially when you're already juggling a million things as a founder.
They really streamlined all of that into one easy app. That's got to be so valuable.
I know, absolutely. Having everything in one place.
Yeah.
Saves time, reduces stress.
Yeah.
Lets you focus on the important stuff, your startup.
Your passion.
Right. It's like a Swiss Army knife for fundraising, but instead of blades, it's all these digital tools.
I love it. The Swiss Army knife of fundraising.
Exactly. And it's all geared towards helping you succeed.
Now, while we were looking into all this, we noticed some competitors have, like, similar features.
Oh, yeah.
like basic editing or investor databases, that kind of thing.
Right.
But none of them seem to offer this whole package, this all-in-one solution like SG Trader AI.
They don't.
It's like they went above and beyond to really make something just for startups.
They did. It's a really smart move.
What are your thoughts on that?
Well, by focusing on startups specifically, they've made a product that really gets their unique challenges.
So it's not a generic video thing trying to be everything to everyone.
Exactly. It's a specialized tool made with that startup journey in mind.
You mentioned earlier that SG Trader AI can actually tailor the pitch script
Yeah.
to different kinds of investors.
That's right.
That really caught my attention. Can you give us like a real world example of how that works?
Sure. So imagine a startup, they're focused on sustainable agriculture.
Okay.
If they're pitching to an impact investor, someone who cares about, social responsibility,
Right. Making a difference.
SG Trader AI can really play up those angles.
I see.
Like how their tech saves water or helps local farmers.
So it's like the app speaks impact investor fluently.
It's a great way to put it. It knows what matters to them.
So no more one size fits all pitches. You're customizing it to what each investor values.
It's about resonating with their interests.
That's amazing.
Now, let's say you're pitching to a VC who's big on AI.
Okay, yeah.
SG Trader AI, it can look at their portfolio, what they've invested in before, and tailor the pitch to highlight your startup's AI side.
It's speaking the investor's language.
Exactly. It's about showing why your startup is perfect for their strategy.
It's like SG Trader AI takes out all the guesswork in figuring out what they want to hear.
It makes it so much easier to target your pitch.
Almost like a secret weapon in the fundraising game. As we've been talking, I can't help but think
What's that?
this would have been so useful when I was starting out.
I think a lot of entrepreneurs feel that way.
Fundraising is tough. Anything to give you an edge is huge.
It is. And SG Trader AI is a great example of how tech can help.
Empower entrepreneurs.
Exactly. To navigate all the complexities of fundraising with more, confidence.
Yeah, and a solid strategy.
Absolutely.
So we've covered a lot. Let's recap what makes SG Trader AI stand out.
Okay, yeah.
AI-powered script writing tailored to investors.
Right.
Making videos right on your phone.
Super accessible.
Direct access to a network of investors who are ready to go.
That's key.
And an all-in-one platform to streamline everything.
It's all there.
It's like they combined a Hollywood studio, a matchmaking service, and a project management tool.
All for startups. It's a powerful combination.
It is. What makes it so strong is how all those pieces work together, right?
Exactly. It's not just the individual features, it's how they create a whole solution.
Addressing those pain points startups face every step of the way.
Throughout the entire journey.
It's clear that SG Trader AI is like a potential game changer.
It has that potential, yeah.
Now, I want to zoom out a bit, look at the bigger picture.
Okay.
AI is changing so fast.
It's moving at lightning speed.
Do you think tools like this are the future of how startups get funded?
That's the million-dollar question. AI is already transforming so many things.
And the startup world is right there in the mix.
It's definitely not immune. As AI gets even smarter, it makes sense it'll play a bigger role in funding.
It's exciting, but also kind of mind-blowing to think about. For all those listening, entrepreneurs, investors.
Yeah, what does this mean for them?
What are the implications of this shift to AI-powered fundraising? Is it a win-win, or are there downsides?
Well, it's complicated. There are no easy answers. On one hand, tools like this can democratize access to funding.
So,
you need to watch this if you struggle with getting your startup noticed. This Black Friday, seize the chance to shine. For just £200, you can showcase your startup to over 25,000 venture capital and angel investors. Submit a 3-minute video pitch and gain unparalleled exposure with your contact details included for direct follow-up. Your pitch will be broadcast several times daily for an entire month, ensuring maximum visibility. And that's not all. Your product will also be featured on our live streaming channel, which boasts over 100,000 daily views and broadcasts at least 10 times per week. Imagine the possibilities. Consistent exposure to investors actively seeking new opportunities. Venture capitalists provide large capital and strategic guidance, while angel investors offer early-stage funding and mentorship. This promotion connects you to a broad network, enhancing your chances of securing the perfect investment for your startup. Don't let this opportunity slip by. With just a small investment of £200, you can propel your startup to new heights. The submission process is user-friendly, making it easy for startups of all levels to participate. So what are you waiting for? Submit your 3-minute video pitch today and take the first step towards securing the funding and connections your startup needs to thrive. This limited-time Black Friday offer is your ticket to unparalleled visibility and growth. Act now and watch your startup soar.
Startups with great ideas, but like limited resources have a shot.
Exactly. And for investors, AI can make finding and evaluating potential investments easier.
Saving them time and resources.
Exactly.
There's a lot of upside for both sides.
Definitely. But like with any new tech, there are things to watch out for.
What kind of things?
Could there be a bias toward startups that are really good at using AI?
You mean like startups that are good at making their data and message appealing to the algorithms?
Exactly. Almost like SEO, but for fundraising.
Interesting.
And then there's the human element.
Oh, right.
Will using AI make investing less personal?
Less about relationships?
Yeah. Will the art of storytelling, building those connections, take a backseat to data?
It's a valid concern. Trust and rapport are so important in fundraising.
I agree. We don't want it to become just a transaction.
It needs to be a balance, right?
Absolutely.
Yeah.
AI can be super useful for efficiency, insights,
Yeah.
but it shouldn't replace that human element.
Building relationships.
Right. The most successful startups, regardless of the tools, will combine data and storytelling.
Connecting with investors on a human level.
It's that personal touch.
So, as we're talking about SG, Trader AI, and all this,
Yeah.
one question keeps popping into my head.
Okay.
What advice would you give to startups thinking about using AI tools like this, for their fundraising?
That's a great question.
What are some key things they should think about
Well,
to make sure they're using it effectively and ethically?
I think the first thing is to remember AI is a tool.
Oh.
It's not some magic solution.
Right.
It can definitely help make your pitch better, reach more people.
Yeah.
But it's not going to automatically get you funding.
You still need the basics.
Exactly.
A good idea, a strong team, and knowing your market.
You got
AI can boost what you already have, but it can't create it out of thin air.
It's not magic.
So it's about using AI to make your existing efforts stronger, not replacing everything.
Exactly.
Another thing, right. Make sure you're using AI in a way that feels true to you,
Absolutely.
to your brand and your values.
Don't try to force your startup into some mold just because an algorithm might like it.
Like, don't be fake just for the AI.
Right. Investors can see right through that.
You want to use AI to show your real strengths, your passion,
That's what resonates.
not create this fake persona.
Authenticity is key.
And I guess use it as a learning experience.
Oh, definitely.
Use AI to get better at your pitch over time.
Yeah.
Pay attention to what investors say.
Both the good and the bad.
Right, and use that feedback to fine-tune your message, your whole approach.
AI can give you insights, but you have to make sense of them.
It's a partnership, not just blindly following.
Exactly.
The best startups will find that balance.
Using AI's power, but keeping their own vision. It's about finding that sweet spot.
Well, I think that's a perfect place to wrap up.
Yeah.
It's clear from our deep dive that SG Trader AI,
It's really interesting.
it's changing the game for startups trying to raise money.
It is.
It's a powerful set of tools to make a killer pitch and find the right investors.
Powerful.
But
Right.
like with any powerful tool,
Yeah.
you got to use it wisely, ethically,
I'm sure.
and always remember the human side of things.
That's what drives it all.
The human side of innovation and success.
Exactly.
So to all our listeners out there,
Yeah.
embrace the possibilities of AI,
Absolutely.
but stay true to those values that matter most.
Couldn't agree more.
The future of startups, it's bright.
It is.
And with the right tools and mindset, you can achieve anything.
I believe that.
Thanks for joining us on this fascinating deep dive
It was my pleasure.
into AI and startup
There's
fundraising.
a lot to think about.
We hope you learned something valuable to apply to your own journey.
Absolutely.
Until next time, stay curious.
And everyone else have done that. So it's this ongoing tension. What do you charge for the show? What's the supply demand? There's always incredible demand. You can't charge market. Now, though, the scalper's not on the street corner, that artist gets to look every day on SeatGeek and StubHub and go, oh my God, some scalper's making $4,000 a ticket. And I'm paying all the costs, me and the artist. So it's this ongoing challenge of what do they charge that's right for their business model. 90% of what they're going to make in life is coming from the road, so it's their financial business. But where do they find that line where it's accessible, the fan feels connected to them, they don't feel like they're overgouging, and it's slowly moving up over time, and that creates a lot of the social news and tension that exists in that what is the right price that you can deliver supply, demand, and keep fans happy.
Right.
95% of shows don't sell out. You don't hear about those. Those are priced under $100. Everyone is happy they got a ticket. There's no drama. Unfortunately, those 10 times a year, when you have 10 million people trying to buy 1 million Oasis tickets, there's no nice way to tell 9 million passionate fans, sorry, the store is closed. That creates lots of tension, and they go online and they see 10 pages of secondary tickets, and they get off. So do they get mad at Ticketmaster that we must have somehow let the scalpers in, gave tickets to the scalper? Yes, absolutely. That's the first place they like to punch.
If you had a magic wand, or you were sort of named emperor for the day, and you could change ticketing however you wanted, what would you do?
Well, it's a great question. So the first challenge overall, and outside of America, there's really good scalper regulations.
Right. So Europe, very different.
Europe, most countries other than America.
Yeah.
But really what them off is, why is there 10 pages of scalpers selling $4,000 tickets? The system must be broken, Rapino. You made me sign up. I'm a fan. I'm willing to pay. You tell me it's sold out. But then how did they get all these tickets? Where did they come from? If I had to change it, yes, I would love regulation on secondary, whether it's capped. We really believe the artist should have better control. It's frustrating me with an artist.
Capped meaning that you can't resell, that you can only resell at a certain price?
Yeah. We think you should be able to resell. So, the scalpers like to go to regulators and say, oh, I can't give this ticket to my grandmother if you close it. So that's not the problem we're having. The problem is professional bots all around the world. I just think if you ask me how to fix it, yes, that's the problem. No matter how much we do on our side, it's frustrating for the fan to spend $4,000 when Bruce Springsteen says, you know what, I only want to charge $300 for the front row. But no, the fan isn't getting it for $300. The bot is, and then they're charging $3,000. So the artist is off, because why doesn't he charge $3,000? Charge market, right? If you really want to fix it, just charge market, and then there's no secondary. Well, the artists aren't going to do that because they're worried about their fans.
Right.
So if they're going to sacrifice the revenue, which is unheard of for businesses, you shouldn't have a middleman that has nothing invested in the business make any money from it.
Yeah.
So we would love it regulated in some sense, cap it at 20%. Some people can make a little money. That would be the biggest part that we get the most tension on the on-sale, is that.
I want to talk about the business of the WNBA because this is an absolutely fascinating moment to talk about this. Something big is happening. It's undeniable. You've both seen it from different perspectives. Clara, I want to start with you. Back in the day, not that long ago, about 2,000 people average showing up. I have the numbers here. Your average attendance this year, I believe I have this right, 12,730. That is higher than the WNBA average of 9,807. What happened? What was the key thing that happened to drive that number to almost 6 times higher?
What happened to the New York Liberty? Well, first of all, we saw great numbers last year, and we had already broken a lot of business records last year in terms of viewership and attendance, and even gate receipts, which is obviously what we all want from a business standpoint. Fortunately, that success and all the infrastructure that we had built to support that allowed us to be ready for this year. And this year, it's undeniable that everybody got almost like a significant increase in all of the important metrics.
Right.
And the key, of course, is to just sustain that growth.
Right. When you see these sorts of numbers, when you're no longer playing, how does it make you feel that, you were there, you were doing it, and now the numbers are coming?
Little by little, it was the opportunity. Mm-hmm. And I think that's where we saw the skyrocket, and it was honestly franchises being ready for that.
Yeah.
I mean, it was franchises like New York, franchises like the Las Vegas Aces that were ready with a practice facility, with player experience. And so I think the numbers are reflective to a lot of different things, television, all of that stuff, 2020 and all of the social justice and, the bubble and the center stage that we were on during that time. But I think it was also a combination of just franchises being ready to sustain the growth.
So Clara, as we think about what happens next, we're Bloomberg after all, we love dollar figures and valuations. How do valuations go from here? How soon do we see $1 billion women's sports franchise, do you think?
Well, I think I'm on record for saying that in 10 years, I think the New York Liberty can be the first $1 billion women's sports franchise.
All right, write it down.
But what we really like about sports is that, you know, as television viewership is migrating from, you know, linear television via cable, satellite, et cetera, into a streaming environment, people's tastes didn't change. They still want to watch football games and basketball games, and they want to watch movies and TV shows. And so what we're trying to build is, you know, sort of the next generation of an entertainment service, and not just be solely focused on movies, television, VOD.
Are you going to lean ever more into live events? Are they going to be these tentpole moments?
Yeah, well, one of the things that I found when I started in a couple weeks before the pandemic, so not that long ago really, is that the company had done a lot of investing, mostly in Europe, on live streaming. If you go back to like 2018, 2019, it wasn't obvious that you were going to be able to stream premium sports at scale exclusively anywhere in the world. People would say it would break, it won't work. The fact that the company had made that investment paved the way for us to do a deal with the NFL and then ultimately the NBA. And so I look at that as a pretty big advantage for us that we've got that investment and we're able to do it. I think leagues have come to trust us that we're going to be able to do it in a way that's a great experience for customers and represents their sport really well. So it's definitely something we're going to lean into.
Coming up, one of the most powerful moguls in media on the future of TV.
We're going to have a great year this year by all the analyst accounts, and maybe even the best year in the company's history are right there. And so why would you not be excited?
As we spend some time here on the broader presidential race.
Let's focus in on European politics.
Makes you wonder how politics might play out.
Behind the bright lights and adrenaline of pro sports is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I love the fact that you have, we say the cojones, but you can't say that in Bloomberg.
Maybe moxie?
Yeah, moxie. I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all-stars like Billie Jean King.
Well, what should I learn? What should I do? I said, learn the business.
Jay Williams.
You're an asset, but how do you become the principal?
Paul Rabel.
We're going to be the league of digital, and that's why you're going to invest.
Adina Friedman.
I definitely am competitive.
David Rubenstein.
People don't come up to me on the street and say, let's talk about this private equity deal you did recently. Nobody does that. They say, let's talk about the team.
And so many more.
You need a clap?
No, I never. Ready? Go.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Keely Lines deliver news, insight, and analysis live 2 times a day every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
This is Bloomberg Screen Time from Hollywood. For 3 decades, Brian Roberts has watched the evolution of entertainment as the head of Comcast. Through innovation, through acquisitions, he's seen revenue drive from below $1 billion to over $122 billion.
And that growth includes NBC Universal. It includes live sports like the Olympics, the NBA. Brian Roberts spoke about the future of entertainment with Bloomberg's Lucas Shaw.
If you were to go back 10 years and you said, let's design with your perfect knowledge of what the world looks like today, what would be a cool company? You would say, well, I'd like to connect everybody to what we're doing, whether it's in streaming or whether it's in AI or whether it's going to be in, whatever comes next, Zoom calls, working from home. And we have the nation's most connected broadband customers. We have a converged service with wireless and broadband in more homes than AT&T, Verizon, T-Mobile combined. And a lot of that content, 100 million people every quarter coming to watch Today's Show, Tonight's Show, SNL, which is fabulous as always this year. And I don't know how Lorne Michaels can do it every time, but this being such an important year. And then film and television and the stories we have. And then, of course, sports. So I think we have a pretty great company. Why would you not be excited?
You brought up Peacock. I'm curious. How long until Peacock is really a profitable and sustainable business on its own?
Well, first of all, we don't look at it as on its own. So I'm not going to duck your question completely, but that's not how we're running the business. We're running it as part of the media business. So take the Olympics. 87% of the viewing was on NBC or one of our cable channels. 13% was on Peacock. But together, we presented to the consumer all those choices, every event, every athlete, every country. That was a whole company effort. And so to pick one part of the company and say, well, how's that part doing? Well, if your goal is to just be Netflix, that's a really important question. If your goal is to have a media company that, particularly in the United States, which is where most of our emphasis is, we think NBC, we are going to get there, and Peacock is going to be part of how that happens. As more and more people cut the cord, more and more people will take Peacock.
But that's why people ask about the sustainability of Peacock. I get that it's part of this broader group, right? But your cable networks are the ones that are kind of going in the wrong direction, right? So you need something to offset that.
Peacock, we think this year will be the most losses we've had, even including the NBA investment that we're making. We're already improved. That's what last quarter showed.
The NBA won't hurt profitability going forward.
Well, it might theoretically in the short run, but in the long run, we're super excited and think that it's factored into what we need to spend and what we'll monetize.
Isn't that amazing that we actually would say something, we learn, the business evolves, the business grows, we understand the business and we change. We don't stay rigid in we said this publicly, so we're not going to go back on something. So what I love actually about the company is that we will sort of change and we will innovate and we will say those things. And we will sort of just go, okay, maybe we were wrong then, or the business, that was the right decision then, and now this is the right decision now. I think that's like an amazing thing. That's what makes a very dynamic company, to do. Let's make local language film and TV all around the world has never been done before. We sort of did it. So I actually love that part, that we will publicly go, okay, we've learned more of the business has changed, so we're gonna change.
You come from the world of TV. For $80 million, you can make 8 episodes of a TV show, you can make a movie. I feel like for Netflix, a TV show is generally more economical than a movie. Why are you guys still in the movie business? Like, what is the value that Netflix gets from original movies?
Oh, I think that's too narrow of a way to look at it, because it's not about economical. It's members all around the world love movies and love TV shows and love nonfiction and love docs, right? And love some of, these live events we do. So we are pleasing and making all of those things with a great variety of what we do. And people love movies. We love movies, and people love movies. And so I think looking at cost in that way is sort of the wrong way to look at the business. I really look at it as we know people love movies, and so we should make lots of movies. So I just think it's really important that giving audiences lots of different kinds of things that we know they love.
Something that you are now doing that a lot of other people do is live. You're going to start showing wrestling every week next year. This was a big deal for you. Why is a company that's so synonymous with on-demand doing more live programming, and why did you want wrestling in particular?
What I love about just live, it was just kind of, it's just kind of an expansion of programming, right? There's certain types of things that just feel like they're kind of more exciting live, or, I'd say, look, the Tom Brady roast. We would have done it regardless, live or not live. I think making it live had a fun, unpredictable energy conversation around what that was. And so to me, live was just a different, it's just kind of another, tool that we have of like, is this thing creatively better live? Is this a different kind of programming, right, we can do? Which then obviously did lead to WWE.
I have a little, I have a little romanticism about Hollywood still, because I'm from the before time. From when we came to Hollywood, it was still Hollywood, Now it's like tech's all come down here and everything's disorienting, and I don't know what a studio is anymore and what distribution is anymore. But the idea that there's a lot and the people go to work on the lot and, it looks like a back lot and there's a guy in the corner, smoking a cigar and he's rich and
that's what you want.
I like that, yeah. That's good. Compared to the tech, compared to Northern California and tech guys, yeah, I like that, you know what I mean? Like I've been lucky enough in my life to get to know kind of like tech people, and I live in New York now, I know Wall Street people, and Hollywood, and I'm just totally proud to be part of the Hollywood community.
God, I want to replay that to 25-year-old Matt and see what he has to
I know, that's what I'm saying, after living through all this stuff, like, like I'm not like the
and is that because
Hollywood is like the most stand-up place of all these industries, man, you know what I mean?
Coming up, music's evolution and where it's heading next.
We've had 5 years of consecutive growth from streaming. We've had 10 years of consecutive growth as a company, but the challenges are always what's next.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
I think most investors are intoxicated by the opportunity in artificial intelligence. $160 billion being spent this year. That's just one data point. Another data point is a $3 trillion market cap for NVIDIA against $80 billion of sales on a trailing 12-month basis. Obviously, a lot of growth is expected for NVIDIA and for other businesses in the space, but that is yet to materialize, and it's impossible to know what the scale will be of an NVIDIA or other players in the artificial intelligence ecosystem. I think investors are just so focused on the opportunity set, on what it can be, and it's a self-fulfilling prophecy. If you bought NVIDIA a year ago or 2 years ago, you're pretty excited about where it is today, and you think that it could go to the moon. As a result, you don't really focus on the risks. You're sort of just too excited about the opportunity.
Morning from our world headquarters in New York. I'm Menace Credit.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday, only on Bloomberg. Context changes everything.
This is Bloomberg Screen Time from Hollywood. Record sales keep growing thanks to streaming. But where does the music industry turn to next to maintain that growth?
Rob Stringer is the chairman of Sony Music Group. He spoke with Bloomberg's Lucas Shaw.
We've had 5 years of consecutive growth from streaming. We've had 10 years of consecutive growth from the company, but the challenges are always what's next. I mean, we are at a crossroads at the moment. We have AI and we have other challenges of just constantly looking how the business moves on. But, we're not a new company. We've been around a while, so we've weathered plenty of storms in the past, and whatever comes hitting our way next, I think we'll probably figure it out.
What of those new things do you consider the biggest opportunity or the biggest threat?
Well, I think the threat is that the disruption from the next chapter of tech causes something that happens that doesn't, to my mind, benefit the art. I mean, my view of where my background and where I come from was art first, business and tech was involved in that second. So if I look at the next chapter, I care about what happens with the art. The tech, I mean, I've been at the company a long time. I've been through plenty of different chapters of technological innovation, whether it be cassettes or CDs or downloads or streaming or whatever. So I look at it and say, how is it going to affect the art, and how is our positioning going to be? Because at the end of the day, I look after a 125-year-old company, really. And to my mind, it's like a modern art museum, and we have amazing paintings from the past in there, and I'm always looking to put brand new paintings in there from future geniuses. And so therefore, I'm always concerned with that. Sometimes the tech bothers me more, and sometimes it bothers me less.
Is there a tech platform right now that you feel like I guess, you would like to see them pay you considerably more, right? Like, you're making plenty from Spotify, I imagine.
You know the answer to that. So you're just asking, you already know the answer to that. I'd like several tech platforms to pay me more.
Okay, I'll ask more directly. Does TikTok pay you guys enough?
I start off with TikTok on the right note, and did we allow them to become what they think they are, which is a promotional platform? And we possibly did. They are not a promotional platform. They are a hugely profitable corporation. And we allowed them to be MTV. And we shouldn't have done that. And now we're backpedaling from there. But the truth is, we should get paid more by several of our DSP partners, and that's part of my job, is to make sure that we're paid, and in turn the artists are paid.
I'm curious, if you were starting a new company today, who is an artist out there, like, if you could just pick one, and I'm going to build around you, who would you pick?
I think the artist that's, is one that you should always bet on, and is already a huge star, and you can always bet on because they want it all the time, and they do what it takes to be, present and relative all the time, is Taylor Swift.
I was actually not thinking you were going to say that, but it's an obvious answer.
The fun part about it is everyone, there's a huge opportunity coming with AI, and it's going to change the music industry the same way Pro Tools did. When Pro Tools came along, people said, what is this? We need live instruments. And you realize it's a tool to create more music. And I think AI is going to do the same thing. But there's always going to be a need for both human emotion and human error.
When you started your career, right, did you ever think you'd become one of the most in-demand spokespeople for different companies in this country?
Yes and no. Yes, because I always believed in me, and I always thought that if you give opportunity, we're going to make the most of it. But no, because at the time when I was entering into the music industry, it was only certain things we could do. There was certain things that wasn't legal that are legal now.
Do you feel, you're obviously a little joking a little bit, but do you feel like growing acceptance of weed has kind of smoothed the path for you and made you kind of more presentable for companies?
I think it's the medical side of it is being brought forward a lot. Usually when medical is the first word, then you have more understanding. Because I've had people in my family who dealt with cancer and certain, illnesses, and cannabis and THC has helped them, ease the pain and have a smooth transition. So it's like, and then I look at my career and look at me and look at what I look like. And I look at some people in the industry and what they look like. And maybe they do alcohol and this and that and the other, but I do weed and I look like this. Like, you know what I'm saying? Like 31 years later.
Also here at Screen Time, Bloomberg Businessweek revealed its annual list of ones to watch in entertainment.
These are the people poised to be the leaders of tomorrow. We asked them what they're watching out for.
For me, it's Issa Rae. So Issa is somebody who started as a YouTube, creator, and I think was one of the few who successfully transitioned to Hollywood. And what I appreciate about her career is that she's not only successfully transitioned to Hollywood, but she's doing a lot of work to help bring others along.
Never forget where you came from, and always try to remain humble and, really connect with the people who follow you. Don't think you're superior to them. You're one of them and they're one of you. So that's really important,
In this town, there's a lot of noise. There's a lot of temptation to try to follow trends or do things like that. I think that, sort of finding your own, North Star and kind of being true to what interests you as an artist, as a creator, as a filmmaker is really important. I think that making yourself the first audience member is oftentimes the best way to do your best work, and the audience will find you if it's good, hopefully.
That's Bloomberg Screen Time. For more, go to Bloomberg.com. I'm Caroline Hyde.
And I'm Ed Ludlow, and this is Bloomberg.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
top names in global leadership are on Bloomberg.
When it comes to tariffs, we need to be very clear. The European Union is negotiating as a whole, so there's no room to have bilateral agreements. It's a core competency of the Commission. But speaking about the art of the deal, I think a deal can be made when it comes to the U.S.-European trade relations.
Nobody covers the top global leaders like Bloomberg. Context changes everything.
There is no backwards in recycling. There is no backwards in treating pollutants in the water. The trends at times of what you talk in the press may be different from one crisis to the next. My job is to go beyond crisis, to anticipate. That's why innovation. We knew we could do recycling of plastics. For years, nobody was really interested in that. And suddenly, it takes off. But we found a solution in the meantime. So in a way, my job as a chief exec is to deal with the short term and to be able to deliver essential services, even in time of crisis, as well as to see the long term and deliver good result, of course, for my shareholders. Because in a way, delivering good results now is a way to afford the future and to afford to innovate and to see the long term as well.
The top names in business are on Bloomberg.
We're making sure that we both get the bank to be more efficient and get it to be more simple. So that modernization and simplification agenda is very important. That also means investing. The transformation that we're doing is both addressing some of the regulatory issues that were raised, but they're also in the benefit of shareholders.
Nobody covers business like Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg. Welcome to the Bloomberg Global Business Forum. I'm here at the Plaza Hotel in Midtown Manhattan to bring you some of today's events, headlined by the U.S. President Joe Biden and Bloomberg founder Michael Bloomberg. And that's where we'll start.
The fact is that none of the big challenges that we face can be solved by governments alone. All of them require cooperation, not only across borders, but also between governments and businesses. And the more the two groups work together, the better positioned we'll be to seize opportunities to save lives and to improve people's lives.
It's a perfect time to go big. The market for clean energy is booming. Inflation is way down in America. The Federal Reserve just announced lowering interest rates. We should give business even more confidence to invest trillions of dollars that are on the sidelines in the clean energy industries of the future. I'm doing my part. Now I'm calling on other companies with the capital in the room to invest more and do more.
Now, the goal of the Bloomberg Global Business Forum is to bring together leaders from government and business to assess risks and opportunities impacting global markets. At the top of that list is AI. Here's Bloomberg's Eric Schatzker with Google's Ruth Porat.
We do live in an extraordinary time in history, a generational time. I think the upsides are extraordinary. We'll start with that. There are really four to think about. The economic upside, estimates have it at $17 to $25 trillion of economic upside by 2030 per year. There's the social issues that can be addressed with AI around healthcare, around education, around climate change. There's the opportunity to massively push the frontier in science. For example, Google DeepMind, open source, something called AlphaFold. 2 million scientists are working on this, and the view is that will help them accelerate drug discovery. And then there's security issues. To maximize the upside, we collectively need to ensure that we have the base, the foundation, so that it is safe in execution around everything that ranges from information to job transition to how we use energy efficiently for the planet. And so when I think about the way we approach this, everywhere we go, in my mind, I've got a simple heuristic, a triangle. What's fascinating to me is in speaking to heads of state around the globe, they want to make sure they're capturing this upside. As one said, this is a legacy opportunity for economic growth in delivering these benefits to everyone in his country. And that starts with infrastructure, deep technical infrastructure, the subsea cables that link everybody up. But it then very much goes to, you have to be connected to access the information and tools that ensure that everyone, everywhere around the planet, has the same quality of information and access to markets that everyone in this room has. And one of the things is we are now serving people around the globe in 246 languages. But what's really profound and goes to this notion that AI is moving really quickly, we added 110 languages in the last 6 months alone, which means 500 million people on the planet can now access information in their own language. That's the second part of the triangle. The third part of the triangle is ensuring that people have the skills to thrive in this changing world and ensuring that we're doing the right kind of training, skilling globally. Delivering on that triangle maximizes the upside and helps with some of those issues that you asked about on the downside.
What do you hope to see in terms of AI policies from the next president, whomever that happens to be, and the next Congress?
Well, I think very importantly, let's take stock of what has been done, because I think at the core of the approach from the White House, from the president and his team, has been a recognition about the strategic imperative due to the economic upside and the social benefit upside. And so it's about maximizing the upside, mitigating the downside, and bringing together experts from the private sector and the public sector to work together has been key, point number one. Point number two, they've taken a risk-based approach, which is a recognition that AI is applied to many different things in our daily life. The opportunity is wide, and so there's not one size fits all. Think about the risk inherent in the application of AI in any area. And then they've required the industry to do a number of things to actually mitigate against the downside around transparency, around red teaming, things to prevent abuse of it. The other thing is really encouraging bipartisan solutions. So I would also say, if I could broaden it out, right now in the Senate, there's a bipartisan approach around an AI framework that Senator Schumer and Round and others have proposed. And again, it looks at all elements of how do we invest to be competitive, how do we prevent working on the downside. So I would hope it's a continuation of this and that it continues to be bipartisan because it's such a critical issue.
If the West is going to win the contest in artificial intelligence against a centrally planned economy, that would be China, of course, the public and private sectors, to your point, have to work together collaboratively as partners. How would you rate the effectiveness of that partnership today?
Early days, and I think very strong. And let me explain why. I think you're absolutely right that this is a strategic imperative. The good news is the U.S. today, the West today, is in a leadership position, but that is not a foregone conclusion. We have very formidable competitors globally. And so I would say there are a number of different levels on which it's operating. The government, the U.S. government, the White House has really pushed forward things like the Partnership for Global Infrastructure to make sure not only that we're investing in the U.S., but that we're working with countries around the globe in a way where we can bring infrastructure solutions. We just announced, as an example, Google did a cable from Kenya down to South Africa over to Australia that helps build the resilience that's needed. And to my prior point about the triangle, you've got the infrastructure that unlocks the content that's needed to access world markets. So areas like Partnership for Global Infrastructure, really important. Public-private partnership, really important. But there's another critical element that's true for everyone in the room, and we're seeing it, again, at the federal and state level in the states. It's important to lead from the front. I talked about this $17 to $25 trillion economic upside opportunity. That only happens if we see what economists call diffusion. It is being used in every industry, and we're already seeing a lot of effort around that.
That was Google's Ruth Porat talking to Bloomberg's Eric Schatzker. Now coming up, tracking progress and improving lives.
So this fiscal space that we create together with the World Bank becomes a transformational force. This is how we do it.
That's how we do it, baby. There we go. That's right.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. Millions of passengers ride Flix buses each year, but please don't call Flix a bus company.
Flix is a global asset-light travel tech company.
CFO Christophe Debus leads a new business model transforming a traditional industry.
It's about affordable, convenient, and sustainable mobility.
Watch Chief Future Officer only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg.
Is someone who brings people together. He doesn't just reach across the table. He builds consensus. And he doesn't get bogged down by the scale or scope of problems. He focuses on finding and implementing solutions. Mike's superpower is bringing people together from different sectors and different fields to solve some of the world's biggest problems. Here's what the Global Business Forum is all about. And as is often the case at convenings like this, his vision and leadership is the reason that we're all here.
This is the Bloomberg Global Business Forum. I'm Francine Lacqua. Now, the event is supported by Bloomberg Philanthropies with the IMF and the World Bank. The heads of those organizations also took to the stage with Bloomberg Board of Directors Chair Mark Carney to discuss the importance of cooperation for their partnerships.
An open-ended question. What changes are underway that you think will have some of the biggest impacts going forward with respect to the World Bank Group?
The fact that these two institutions can actually work in a way that they were designed to work 80 years ago. No, I don't mean that you shouldn't change for what's changed in the environment. The idea of creating a macro-focused institution with a development-focused institution and find a way for them to make 2 + 2 = 5 is pretty important. And while that doesn't show up every day to everybody in a system, for those who work with us, it does. And I think that's one big piece. The second big piece is to expand, Mark, and I'm giving you the plumbing of the institution right now, as compared to the big picture, is to expand the vision of the institution, the aperture from which we look at problems, from being only about poverty to also including the challenge, the intertwined challenges, what we call livable planet, climate, fragility, conflict, violence, pandemics, food insecurity, and thinking that you can segregate these into little buckets is a luxury we don't have. And that leads to the need for us to work quicker, turn projects around faster. We've turned down the time from getting from a project being discussed to approved from 19 months to 16, headed to 12. To simplicity inside the organization and breaking some of the silos down for our clients, to how we work with other MDBs, back to the point about working with her. All that, combined with leveraging our balance sheet and in a different way, is what we're up to. So you can take this plumbing and then you can put big things onto it and have the ambition to drive. But you can't do that if the basics of the bank aren't working the way a better bank should work.
Okay, so speed, scale, and sisterhood.
And simplicity.
And simplicity and sisterhood.
Gotta get stuff.
Which is collaboration. I mean, many amazing things in the first term, but one of the things that really struck me is you, and with partners obviously, but you turned dead money, SDRs, into action with the Resilience and Sustainability Trust at a time when it was absolutely essential. And I wonder if you could draw that out a bit more in terms of the overall impact of some of the things the IMF is doing, including in collaboration with the World Bank.
Let me say that what we are experiencing today
is really remarkable. We have lived through unprecedented shocks: pandemic, war in Europe, crisis of energy and food prices, inflation, interest rates, and yet you look at the world economy. This year it would go 3.2%. Next year we expect 3.2%. It did not collapse. And the question is, why? What made it so resilient? And it is putting in place sound foundation of good policies and strong institutions. And we at the IMF have been a big part of it, writing this story of resilience. Yep. Now, you look into the future and you see that there will be more exogenous shocks, climate change being one of the causes of these shocks. So inevitably at the fund, we are asking a question: what can we do? We integrate climate vulnerability in our analysis. We look at green growth opportunities for our members. We are a financial institution. People look at us and say, you think climate is important? Put money where your mouth is. And this is how we created the Resilience and Sustainability Trust. It is a fabulous story of creativity. During this period of shocks, we have injected $1 trillion in liquidity and reserves to help the economy overcome these shocks. $650 billion from special drawing rights. They do not add to debt. This is our collective power in action. We gave it to everybody, but some of our members are very strong. They don't need that injection of reserves. And as you said, for them, this is a sleeping beauty. We woke it up. So we got about $100 billion back that we can lend at concessional terms and do so in the World Bank very closely. So here is what we do. We, from the IMF, we create fiscal space for our vulnerable members. We don't tell them how to use the money. We say, here it is. You can address this danger of climate change. And then comes the World Bank with a powerful program of investments. So this fiscal space that we create together with the World Bank becomes a transformational force. This is how we do it.
That's how we do it, baby. There we go. There you go. She and the IMF hand off this baby in macro-micro coordination to the World Bank. And what do you do with that fiscal capacity if countries choose to pursue it?
So, Mark, one example of that. In fact, the first example, we're working on this together, is the idea of getting electricity to Africans in the world. If you think about the African continent, 600 million people in Africa do not have any electricity. So when you fly over the continent at night and you see dark areas everywhere, it's not because there aren't people, it's because they're living the way their forefathers did. And I think in the 21st century, that's a relatively shameful situation to be in, and one that, if you think of electricity as a basic human right, health, education, your elevator works, things work, refrigerators, medicines being kept cold, safety with street lights. Everything we take for granted depends upon electricity. And they don't have it at all. I'm not talking about intermittent and brownouts. I'm talking about zero. So what we've committed to do with the African Development Bank and a couple of other partners is to reach 300 million out of the 600 billion with renewable energy by 2030. It will take a lot of work.
Sorry, can we just stop and reflect on that for a second, and then you go. 300 million people with electricity by 2030. Right. I mean, it's a remark. But
I mean, the bank did 117 million people connected to electricity in the prior decade. Yeah. This is that multiplied by 3 in 6 years. It's going to need work. The fact is that you take that It's going to need money from the private sector, but then it needs money for the governments to reform their utilities, to connect them to the grid, to install the right basic technologies to enable this to happen. Where are they going to get that money from when they're putting more money to debt repayment than they are to health and education put together? That's when she steps in. So we can go to the government of a country, talk about doing this with them in an energy compact, go to Kristalina and say, you need to talk to these guys. If she has a program with them, she can go to them and say, I know you're working really hard on connecting people to renewable energy. Go ahead and do that work. I know you need fiscal headroom. Here's money for that. That's the way we are working this together.
Coming up, putting private investment to work.
How do we navigate? It's a lot of trial and error, but it can't work without public and private sector working very, very closely together.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
You need to watch this if you struggle with getting your startup noticed. This Black Friday, seize the chance to shine. For just £200, you can showcase your startup to over 25,000 venture capital and angel investors. Submit a 3-minute video pitch and gain unparalleled exposure with your contact details included for direct follow-up. Your pitch will be broadcast several times daily for an entire month, ensuring maximum visibility. And that's not all. Your product will also be featured on our live streaming channel, which boasts over 100,000 daily views and broadcasts at least 10 times per week. Imagine the possibilities. Consistent exposure to investors actively seeking new opportunities. Venture capitalists provide large capital and strategic guidance, while angel investors offer early-stage funding and mentorship. This promotion connects you to a broad network, enhancing your chances of securing the perfect investment for your startup. Don't let this opportunity slip by. With just a small investment of £200, you can propel your startup to new heights. The submission process is user-friendly, making it easy for startups of all levels to participate. So what are you waiting for? Submit your 3-minute video pitch today and take the first step towards securing the funding and connections your startup needs to thrive. This limited-time Black Friday offer is your ticket to unparalleled visibility and growth. Act now and watch your startup soar.
Between the public sector and the private sector.
We are quite successful, I should say, to set up this plan. So soon we're going to announce to have 62 gigawatt of renewable energy, like hydropower, wind, solar panel, and tidal, you name it, for the next 30 years. We have to have our own grid. That's another issue. So there are so complex issue here. It's not only the to build the renewable energy, but also the infrastructure of this. Besides that, we should also discuss carefully with our neighbors, because if we export the green energy for their own database, we need also the green energy for our own database, because our economy moving so well today, because of efficiency, transparency, and less corruption in Indonesia. So the collaboration with the private sector, philanthropists, and others is very, very important. I don't think that the government of Indonesia can do it alone.
Shamara, I see you nodding there. Are there still barriers to supporting countries like Indonesia and others?
We need solutions that can be the default choice of rational actors, so you can thread the needle with driving, uplifting living standards and economic development with climate-related solutions across, in energy, we've cracked the code now on wind and solar, and they are pretty much the cheapest form of new build energy, but they're intermittent. So we need firming solutions, and things like coal are firmed low-cost sources of energy, so we need to figure out, is it going to be hydrogen, is it going to be nuclear, is it going to be long duration storage with batteries, and the same in transport, where we've cracked the code on passenger vehicles. We need to do long haul in shipping, in
aviation, etc. I could go on in agriculture, but in doing that, there's very high risk as you go into the new things. We've now discovered if we work with the MDBs, they are actually quite positioned to do that early stage, high risk, high return targeting investing. And the work we've been doing with RJ and the Private Sector Investment Lab, which Bill is involved in with me, has been a game changer, I think, in really helping the MDB money work with mobilising and catalysing private sector money.
Bill, how do you navigate some of those complications that Shmara was just outlining there?
So finding a way to get the capital that's available into the right place in a way that can actually be used to pay today for all this renewable power that's going to be in place 20 years from now to replace the coal-fired power plants is enormously complicated. But it's happening. It's happening in many different ways. It's happening with developments in the carbon markets that are beginning to think about standards and legislative frameworks that can be set to support that kind of activity. It's happening with key initiatives, for example, from the Singaporeans. So how do we navigate? It's a lot of trial and error, but it can't work without public and private sector working very, very closely together.
And Majid, I want you to jump in here because there are also other models similar to what you and your team are doing with Altera, a $30 billion fund that is trying to do just that, right? Channel funding to where it needs to be. I mean, how is that progressing for you and your team?
What I think is more important in that is that we've got the best and the brightest minds in the finance world thinking about how to invest in the Global South. We've created 2 new funds with TPG and Brookfield, and we have more to come with BlackRock, focused on the Global South. Our catalytic fund has $5 billion committed to the Global South, and they're committing their best talent to thinking about how we address the challenges of investing in the developing world. Last year, as DG of COP, you know COP28 was one of the most successful COPs we've had. We were able to mobilize more than $80 billion at COP. And we traveled around the world trying to figure out, well, what are the challenges that are preventing the investment, particularly to the Global South, in climate? And what we saw time and time again was that we understood what the barriers were, we understood what the challenges were, but we weren't just taking that, nobody was taking that step to move forward. And we thought about what kind of solutions we could create. We knew that we had concessional capital already there. We know we have the private sector. And how could we bridge between those 2 things? And that's how we came up with Altera, with this idea that we could be a leader, we could bring the private sector along with us, work with others to try to mobilize capital. And today, I think we really are doing that.
What is the next goal? I mean, we have COP29 coming up very soon. Many people are referring to it as the finance COP. What is that next goal then for you?
COP29 is going to be really critical. COP28 was about action, right? And I think that what we did really successfully that was different was, for the first time, instead of talking about how we were going to engage the private sector, we brought the private sector to the table and said, hey, what are you going to do? And that was a key shift. I think that, you know, as a negotiator who'd been in climate for many, many years, I was in Paris, you know, I felt that we were talking a lot about mobilizing the private sector, but we weren't talking to them. We would go to energy conversations, and there wouldn't be the leaders of energy in those meetings. We would go to finance conversations, and we wouldn't have ministers of finance having the conversation about how to mobilize finance. That changed at COP28. And now, as we go to COP29, we really need to deliver on that finance piece. And that's why our Azerbaijani colleagues, I know, are going to do a fantastic job, but we collectively have to help them to deliver an outcome. That means that we need to see the developed world stepping up and showing leadership, and we need to see how we mobilize the private sector, how we all come together to mobilize capital behind the solutions that we know are out there. We don't need to invent new things. The solutions are there, we just need to invest in them.
Minister, from your perspective, what is the ask then for you when you go to COP29? I mean, do you continue to ask for more accelerated capital to be channeled into your market?
Cannot be one side. It cannot be one country. Have to be collaboration among nations in order to save this planet. If you can do this together, I'm pretty confident we can do it.
So that's what happened at the Bloomberg Global Business Forum here at the Plaza Hotel in New York. You can see more of the conversations and more of the stories at Bloomberg.com. I'm Francine Lacroix. Thank you.
after each day, do you look at how they're doing each day, or do you look at them each week, and how much time do you give them before you say, you know, you're not doing so well?
I mean, we look all the time. So, you know, I have screens on my desk that, you know, staring at all day long. But it's not exactly like that. I think one of the things people don't fully appreciate in this model is you're really building businesses. So we look at every strategy as a business. So you have the long-short equity business, or macro business, commodities business, quantitative business. And you have business plans for that strategy. How do you become world-class in that strategy, which is, you know, multi-year, multi-decade, you know, undertaking. And you want to get better and better every year. And so then you go down to the team level. What team do you need to have this particular exposure? What is their edge? How are they going to get better year to year, month to month, right? And so then you go to the hiring of the team, the analysts, the infrastructure, the risk management, and you're constantly trying to improve the process and the people in each of those facets all the time. And so you're always looking at them on an absolute basis, how are they doing, and on a relative basis to other people in that strategy, and you're evaluating it, you know, every quarter, every year. But to answer your question, we usually look for a couple years of performance to make people decisions, unless something is really off.
We felt strongly that there has been an opportunity for there to be an experience on mobile that is centered around gamers. Like, we talk a lot about how there's 3 billion gamers in the world. 2 of those billion play on mobile, and half of those actually play on mobile and they play on another device. But there isn't actually a gaming platform and store experience that is centered around players and goes.
Okay, today I'm going to talk about how to succeed with a startup. Obviously, more than can be said here in 20 minutes, but I will do the best I can. The most important thing, the number one lesson we try to teach startups, is that the degree to which you're successful approximates the degree to which you build a product that is so good, people spontaneously tell their friends about it. Startups always ask us for the secret to success. They always want to believe it's something other than this, because this is really hard to do. But this is it. If you can build a product that is so good, people spontaneously tell their friends about it, you have done 80% of the work that you need to be a really successful startup. If you think about the most successful companies you know, Google, Facebook, whatever, you probably found out about them because a friend of yours said, you got to try this, it's great. So this is the bar. Something that people love so much they tell their friends about it. One important indicator for a product like that is a product that's simple to explain and easy to understand. If you can't explain in a few words what you do, and if at least some people don't say, oh, that's pretty interesting, that's usually a mistake. It's usually a sign of unclear thinking or a need that is not big enough.
I want a bank that shows me what I spend instantly.
We're Monzo. Give us a go. See?
Well, I want a bank that can help me budget for the things I need, like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
Hi, I'm Laurie Haynes, CEO and co-founder of Shirar, and I'm really excited to tell you that we are going to be raising funds for Shirar again. After a successful raise in 2023, it's time to scale.
We hope that you enjoy the pitch deck and the financial model. Any questions, please don't hesitate to ask us, and we can't wait for you to be part of Shirar.
I will show you how to get the best funding for your startup idea. Let's get started. Here's the deal. If you have an amazing startup idea and need funds to fuel it, we're here to help. Simply send us a video where you explain your idea. Make it clear, concise, and compelling. Hook us in with your passion and vision. Don't forget to include your contact details so investors can reach out directly. This is your chance to shine and get your idea in front of people who can make it a reality. Imagine turning your startup dream into a thriving business. It all starts with that one simple step. So what are you waiting for? Grab your phone, hit record, and let your idea fly. The future of your startup could be just one video away. Remember, be clear, be passionate, and most importantly, be you. We can't wait to see what you've got. Let's get funded now.
Hosted the B20 and G20 summits this year and COP30 in 2025. Brazil is helping to set the agenda. That's why we're here. One of the most critical questions for Brazil and every country in the global south is about alignment. Do you align with the US, with China, with the EU, or maybe with no one? Neutrality, non-alignment.
Well, it is a changed world for sure. We have to look at what the seismic shifts are under our feet in recent years. And you have to go to ongoing wars in the Middle East. You have to go to the rise of China, and I would say more recently the rise of India. You have to say COVID was an accelerant. And so we're likely to see the devolution of really kind of a bipolar construct, although the US-China relationship will undergird everything that we see play out in the next few years. And we're likely to see regional groupings pop up because countries are not going to want to place their bets in any one particular direction. They're going to want to act on self-interest, as all countries do, which is to say, keep your options open.
Anna, how does today's world look to you? Does it look the same as it does to John Huntsman, or does it look different?
No, the world has certainly changed. But when you take a step back, you need to take a broader view to corporate strategy, country strategy, where there's always an element of your client base, your customer base. So by being non-aligned and presenting a neutral stance and demonstrating industrial prowess and competitiveness as a country, as a company, one can actually win by being the recipient of those investments. So I think there is a massive opportunity in showing that there's actually a third way, which is the non-polarized way, which frankly in politics that also should be the way, where, right, there's got to be a way in the middle.
Wesley, how concerned are you about the conflicts, hot and cold, around the world, the state of divisiveness?
When we see, China and US, increasing, some disagreement or some...
There's tension.
Yeah, some tension. Of course, this is a concern, and I think it's a concern globally that, is the two largest economy global. China has a huge consumer base, and a lot of, especially in the food sector, China is a key customer to anyone that is in the food sector. So we do a lot of business with both.
Now, when you think about non-alignment, we didn't invent this in Brazil. Look at Europe, in particularly Germany. I take my cues from Germany, really. Whatever Europe does, we kind of follow because they have the same dilemmas we have, which is kind of being in the middle of a large trade partner, right, and a large strategic ally, such as the United States. And again, there's no perfect answer because this is why the world is the way it is, this current revisionist state. We do the best that we can, and we're doing fine. Seriously, we're doing fine so far.
I've never seen a time in my career, decades in either public or private sectors, where the policy signals have been so ambiguous. And I've never seen a point in time where politics has been this dysfunctional. So you combine the lack of clear policy signals and the dysfunctionality in politics, and it's no wonder we're all saying, where do we go? What are the rules of the road? The WTO doesn't mean anything anymore. There's no digital trade agreement. So it's kind of the Wild West in a sense.
I definitely think that Brazil needs to be talking with everyone.
Non-alignment, in other words.
Not alignment. With China, with Russia, with the US, any country. And one of the problems that, country leaders need to be open to keep talking, even they have a disagreement, because the worst thing is to, to close the door and to not keep talking.
I think the point that Wesley's trying to make and I'm trying to make is perhaps it's easier from a vantage point of being in a non-aligned country, but we see clearly that you can't leave the table, because once you leave the table, all hope's gone to finding the areas where you agree on.
So would you say this is a total repudiation of the economic system that has been the structure of the global economy in the last decades?
We have had a lot of trouble coordinating to do things. Like take trade. Trade is okay, but for years we're waiting another round, and it's not happening. So there are a lot of indicators pointing towards difficulties.
So a structural change that we still haven't seen. What's the format?
Well,
we will see like trade barriers, we see a less global world. That's your view? Mm-hmm.
I would describe it, there are two major developments. One is we, on a geopolitical scene, we now, so to say, realize that we are still in a competition of systems, political and social systems, which for 20, 25 years, was a little bit buried under other priorities that we had. And now, after the pandemic, after the Ukraine war broke out, we, especially in the West, we realized, there is a competition of system. The second that we are seeing is more on the trade side. I think, to simplify it a little bit, we are back to a pre-WTO time. So we dialed back, so it doesn't mean there's no trade. But the mechanics that we are using and the relationship between politics and trade, we are back to more pre-WTO times.
So much less cooperation, much more friction, much more open conflict, all of this.
And utilizing a nation power to impose their own interest in trade and direct investment policies.
Even though Brazil could be potentially one of the sort of winners and examples in this new world, sitting between the two, US and China, we don't see a lot of money pouring in. Why not?
Yeah. The country is attractive on a long-term basis. I mean, we're going to need massive investments in infrastructure. Our rules are relatively stable. They're not perfect, but they're good enough to give people comfort of coming here and invest. And I think there is a lot of, global money available to come here for these long-term opportunities. And at the same time, if you look at countries as large as ours in the rest of the world, and if you look at it through the prism of size, potential for growth, and institutional stability, we compare very favorably. So I think we're benefiting from the fact that there is, polarization and disputes over, large, China and the U.S. and all of a sudden, we're here. I mean, we are and we should be friends to everybody. I mean, I don't think we should pick sides. I think we should look what's in our best interest.
Coming up, China's expansionist agenda is running headlong into the U.S. right here in Brazil.
The Brazilian government is considering, we believe quite seriously, joining the Belt and Road Initiative. How would you feel about that?
Behind the bright lights and adrenaline of pro sport is an equally exciting world of negotiations and deal-making.
That's what we cover each week on our podcast, The Deal.
I love the fact that you have, we say the cojones, I can't say that in Bloomberg.
Maybe moxie?
Yeah, moxie. I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all-stars like Billie Jean King.
Well, what should I learn? What should I do? I said, learn the business.
Jay Williams.
You're the asset, but how do you become the principal?
Paul Rabel.
We're going to be the league of digital, and that's why you're going to invest.
Adina Friedman.
I definitely am competitive.
David Rubenstein.
People don't come up to me on the street and say, let's talk about this private equity deal you did recently. No, nobody does that. They say, let's talk about the team.
And so many more.
You need a clap?
No, I think we're ready. Ready? Go.
You're watching special coverage of Bloomberg New Economy, New Reality, New Rules. I'm Eric Schatzker in Sao Paulo. The world's two largest economies are competing for power and influence in Latin America. China is already Brazil's largest trading partner, and Xi Jinping's Belt and Road Initiative is flooding this region with badly needed investment and development. Bloomberg editor-in-chief John Micklethwaite discussed that standoff between the superpowers with U.S. Deputy National Security Advisor Jonathan Feiner.
What is the U.S. strategy as you see it to counter China in this region?
I guess I would start by saying this is a region that's going to make its own decisions, its own economic decisions, its own decisions about trading partnerships, about security partnerships. And the United States very much respects the sovereignty of the countries in the region and their ability to make their own decisions about what's best for their future. We've also been quite clear that we are engaged in a global competition with China, and that competition is at the core of the U.S.-China relationship, and that it's not limited to the Indo-Pacific, but that it's playing out in other regions of the world, including here in our own hemisphere. There was a narrative that I think that was prevailing when this administration took office, that the United States was sort of on the verge of being surpassed by China as an economic power, that the United States influence was waning in the world, that China's influence was on the rise. I think those predictions have very much been reversed over the course of the last few years, in large part because of the partnerships the United States has built with key allies and key partners, including very much in our own hemisphere, and because of the investments that we have made in our own sources of strength here in the United States. And so what we're seeing play out now in this region, in Africa, in the Indo-Pacific, and in Europe, we believe, very much is demonstrating the value proposition of working alongside the United States, in the construction of high standard critical infrastructure, in pursuing clean energy policies, in developing advanced technologies, and we feel very good about our position in the region and about the value proposition we offer countries as they make these decisions about the partnerships they will choose.
Do you think there are things, though, that you could do in terms of amassing private capital and those kind of options that America could begin to fight back against this kind of development economics that China is practicing?
Well, one of the huge advantages the United States has, a force multiplier for the United States, and again, goes to this question of the value proposition of working with the United States, is our dynamic and robust private sector, unparalleled anywhere in the world. The United States doesn't have a sovereign wealth fund. We don't have state-owned enterprises that we can direct in terms of their capital flows or investment decisions. But what we can do is incentivize and work with our private sector to invest in areas of strategic significance and importance to us. And we see a demand signal for that investment all around the world, including very much here in our own hemisphere, and believe that there has been a lot of progress in that regard over the course of the past few years, and it's something we very much want to incentivize. It's something unique that the United States can bring to bear in terms of the scale and the scope and the sort of cutting-edge nature of what our private sector offers.
China has a palpably growing influence in this region. How are you thinking about that? Is the US directly trying to counter or respond to that rising influence?
Let me put it this way. I think in trade for a very, very long time, we've been concerned by the indications that we've seen of growing economic dominance of the PRC economy in the global economy, as represented by industries that have been grown strategically and intentionally, not just for dominance within the Chinese economy, but for global marketplace domination. We've seen that in steel, we've seen it in solar, we are now seeing it in EVs and batteries. And what I think is really interesting about today in 2024 is that across our administration, whether you're the U.S. Trade Representative, you're the Secretary of the Treasury, whether you're the Secretary of State or the Director of the National Economic Council, we are all focused on this challenge of Chinese overcapacity, excess production, and the impacts that that is going to have on very open economies like the U.S. economy.
The Brazilian government is considering, we believe quite seriously, joining the Belt and Road Initiative. How would you feel about that?
It's a decision for the Brazilian government, so I want to be upfront about that. Sovereignty is a very, very important aspect of what we are trying to preserve in the world economy, as well as openness to the extent that we can trust each other, and democracy too. So first and foremost, that's a decision that is entirely up to the Brazilian government. That said, I would encourage our friends in Brazil to look at the risks in today's economy through a lens like the ones that we are using, through an objectivity lens, through a risk management lens, and to really think about what the best pathway is forward for more resilience in the Brazilian economy and in the world economy.
E não nos interessa uma guerra fria, uma nova guerra fria entre Estados Unidos e China. Nós temos que buscar manter pontes. Nós somos nós só tem 6 países que têm relações com todos os demais países na ONU. Nós somos um deles. Somos um país que há 150 anos não tem guerra com nenhum vizinho. Então o Brasil tem uma cultura de paz, de diálogo, de relações diplomáticas, e a relação com a China é o nosso maior comprador. Nós temos que nos defender e temos que dialogar com franqueza e buscar parcerias para trazer investimento em infraestrutura, em setores estratégicos.
O Brasil não precisa criar contencioso com ninguém, nós precisamos e temos uma ótima relação com os Estados Unidos, com a União Europeia, mas também algumas medidas protecionistas que tentam ser nos impostas devem ser combatidas com ampliação do leque de parceiros comerciais. É este o fortalecimento dos BRICS, com responsabilidade. O Brasil acabou de tomar hoje medidas importantes com relação à adesão de novos países dos BRICS, porque atrapalharia essa relação harmoniosa. Mas fortalecimento dos BRICS, os fortalecimentos com todo o Oriente Médio e também com a Ásia, em especial com a China, é a oportunidade de superarmos as barreiras comerciais impostas e que tiram as nossas competitividades. Tem dinheiro, tem gente para consumir e o Brasil deve estar fortalecendo. Por isso, eu sou favorável a que o Brasil faça a adesão à Rota da Seda.
Coming up, bracing for the new reality.
The opportunity is massive if you want to take that step, but to do these things requires a massive bet, requires a lot of capital.
Told me that you have a big comic book collection. You still collect comic books, and what are you going to do with them?
I fell in love with comics at a very early age. I love the concept of storytelling, and that's what my job's all about today. It's about storytelling.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show, weeknights at 8 p.m. Eastern Time, right
I'm Menace Credit.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday, only on Bloomberg. Context changes everything.
This is special coverage of Bloomberg New Economy, New Reality, New Rules. I'm Eric Schatzker in Sao Paulo. Trade barriers, technological disruption, environmental catastrophes. These are real and costly challenges for economies in Latin America and throughout the global South. But challenge can equal opportunity. Climate change is driving the energy transition. The decisions taken now will determine growth, prosperity, and sustainability for generations to come.
Are more companies actually looking at Brazil now, either to set up businesses or maybe to buy businesses here?
Yes. And I think that you can have some tectonic movements around that, and especially regarding the energy matrix that Brazil has. As you said, we have, depends on how you measure, 85 to 90% of the matrix is renewables, which means that we are a renewable, the largest renewable energy matrix in the G20, and especially with low subsidies, right? Because doing renewables in UK, it's possible, but quite expensive. In Brazil, it's not. And I think Brazil could be a global hub for data centers, for example. As you know, you cannot build data centers in Virginia anymore. You cannot build, or in UK, you take 2 years to link your data center to the grid. In Brazil, you have huge investment in transmission lines and renewable energy fully available, not expensive. And Brazil could be a very important hub for global data centers that will be needed globally.
What's interesting is Brazil's really a beacon for us. The reason we've invested here in Brazil is because we found that Brazil was a place that we learned a lot about how to bring renewable power to data centers that are powering AI in the cloud. We've got 8 billion of assets here in the ground in Brazil, and we're proud to say that 100% of our data center capacity is provided by hydropower. And so we really found that Brazil was on the front foot, not on the back foot on this issue. And the key to this really isn't about whether we can generate enough power, renewable power. The planet is generating enough renewable power. The real problem is connectivity. And how do you solve the transmission issues that exist in Europe and the United States? There is a battle plan to get there. It'll take time. It'll take capital, a lot of capital, and it also requires just thinking differently as an investor.
I think that the most important obstacle for financing towards the global south is the failure to see this transition as an opportunity. That we are not yet there, even if there are so many good examples of how much of an opportunity this is, how many new industries, new areas of work, new jobs can be created. We still don't see that this is being acknowledged everywhere. We need to get to economies of scale. And the only way that we will do that is with a massive deployment of these technologies everywhere.
Yeah. How do you think about overcoming some of the obstacles that are involved in thinking about investing in developing economies? And what also, just to add to that, do you think the government role should be in helping to attract some of those investments?
What stops global investors from coming into markets like Brazil and other undeveloped countries is volatility of currency, liquidity, and availability of getting debt financing on these projects, because the projects are so much bigger than they used to be from an infrastructure perspective. The opportunity is massive if you want to take that step, but to do these things requires a massive bet, requires a lot of capital.
We've been talking with Brazil a lot about COP30 that's coming up, and that'll be a very important milestone both for climate mitigation and climate adaptation. Brazil has done some good pioneering things on mitigation. The deforestation, it's important that get under control both for Brazil itself and for the world. One of our best breakthrough companies is building a steel plant with partners in Brazil. So yes, Agriculture innovation with Embrapa, Brazil is very strong. So it's fantastic, that the issue is a very important issue, and it, deals with kind of the equity things that Brazil's been a global leader on.
That's just some of the compelling discussion and debate from Bloomberg New Economy, New Reality, New Rules. You can find much more at Bloomberg.com and, of course, on the Bloomberg Terminal. I'm Eric Schatzker in Sao Paulo. This is Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
What are your thoughts on fast fashion? It's been transformative. It gives the masses access to fashion, but there's a cost to it, downside to it.
My first notice is too much waste. I think this is also how I grow up, making your own clothes and making something that's well special and well unique. It's like timeless. And now you see that everybody is looking the same. Wear sweatshirts and wear T-shirts. And for me, it's just like when they wear something that's special, they feel empowered.
Is there a need for fashion to be more mindful of the impact it's having socially, environmentally?
Definitely.
Is it happening enough?
I think it's happening. It's gradually happening. All the designers are doing, everybody is thinking about this subject at this moment, thinking how to be more sustainable, how to be more environmental friendly.
Do you think the fashion industry is doing enough, to ensure that it is sustainable? There's so many targets out there. Are they even realistic in wanting to achieve them?
I think some of them are just like they're using sustainable ideas as a marketing concept only. They're actually not really doing it. I think as a designer, it's really important to really make it happen. Every collection, I think about how to do it and how to tell the customers. I think that is our responsibility to educate our customers.
I think most investors are intoxicated by the opportunity in artificial intelligence. $160 billion being spent this year. That's just one data point. Another data point is a $3 trillion market cap for NVIDIA against $80 billion of sales on a trailing 12-month basis. Obviously, a lot of growth is expected for NVIDIA and for other businesses in the space, but that is yet to materialize, and it's impossible to know what the scale will be of an NVIDIA or other players in the artificial intelligence ecosystem. I think investors are just so focused on the opportunity set, on what it can be, and it's a self-fulfilling prophecy. If you bought NVIDIA a year ago or 2 years ago, you're pretty excited about where it is today, and you think that it could go to the moon. As a result, you don't really focus on the risks. You're sort of just too excited about the opportunity.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Welcome to the Best of the Earthshot Prize Innovation Summit 2024. I'm Jennifer Zabasaja. Founded by His Royal Highness Prince William, the Earthshot Prize is a global environmental challenge that aims to repair and regenerate the planet by helping to discover and scale solutions to climate change. This year's summit brought together policymakers, global business leaders, and climate activists to put a spotlight on the solutions that could help address the world's biggest environmental challenges. NBA superstar Joel Embiid spoke on the need to invest in the use of his home continent of Africa.
We keep going back to infrastructures, not just in sports, education, health. I think, mentors, I think, those are some of the kids, role models, like, Masai, has been a role model, especially for me. Being in this situation, like, for a long time, I've always wanted to do, all I cared about is, helping people. And, since I became a father, that became even more amplified because I look at my kids, I look at the legacy I want to leave, I want them to understand, the world, they have everything, but growing up, we didn't have everything, but I want them to understand that, like, that's not, in other countries, where we grew up is not that way. So I think, the focus on youth, infrastructures, mentorship, I think is a big deal because it's helped me a lot.
Absolutely. Masai, same question to you. You mentioned the youth, you mentioned women. What is needed, to help our continent flourish and to help the youth flourish and to help young women flourish?
Inside the continent, leadership needs to be better. I think outside the continent, the diaspora are doing an incredible job, like affecting. You don't have to do big things. Yeah, people sometimes think you have to go back and do grand things. You can start like little. And I want people to actually think of Africa as a place of investment. I know sometimes it's not that straightforward, but there are unbelievable people that you can work with. There are many people, I think, in our circles, in our world, like in different aspects of life that you can actually work with in Africa. They're incredible countries that you can go to. I'm going to re-emphasize it again. Where every other continent is getting older and Africa is getting younger. There's something there. Yes, there's something that will change, and we have to pay attention to that. To say 1 out of every 4 people is going to be African by 2050, let's go back and really think about that. And think about the talent that comes from there.
How have you approached the work with local communities, and why are they important to your work?
Well, we've seen what a good mayor can do in a great city like New York, right? And I think in COSA 500, we've had the chance to see what good mayors in a 4th and 5th class municipalities in countries like the Philippines can do. They can pass legislation, they can convince fishers that following these rules will actually pay off for them in the future. They can make conservation a priority in their annual plans and their budgets. And then, as we've seen in Honduras, we can also see how they can come together and actually ask the national government to change legislation so that it's the small-scale fishers that are prioritized in the nearshore waters. So there's a lot that can happen, and we've seen mayors grow into this in different ways. They come at it from different paths. For some, it's personal because their father was a fisherman, or that they've seen what devastation a typhoon can cause in their community. For others, it's being brought in by their peers. So we have alliances of mayors from neighboring towns that have come together and actually cooperate with each other because somebody had pulled them in from their neighbors. And then lastly, I think, and this is really what we're hoping will happen with COSA 500, is that they feel like they're part of something bigger.
Maya, I want to turn to you because you're an ambassador for Oceana, and one of their taglines in protecting the ocean is save the ocean, feed the world. So it's very much about this issue of not just protecting the planet, but protecting the people who are here. So how have you seen Oceana's work protect people and the planet?
Yeah, it's interesting because we can't think those are separate things, Once we protect people, we protect the planet. Once we protect the planet, we protect people. It's unity, right? We see ourselves as individuals, but truly, we're all together all the time in this whole universe. So with Oceana, it's, we've been 2 very interesting law changes that we were able to conquer. One in south of Brazil was the bottom troll trolling, and that allowed small-scale fishers to find again lobsters and red snappers, which was being completely depleted. And with that law, which was passed by the Supreme Court at the very end of the fight, it also allowed for, of course, less of an impact of CO2 once you stop bottom trolling, also saving petroleum use. So a lot of good things happen when you can tap into and create one big law of protection. Same thing in Peru when we were able to, well, they were able, our beautiful team of Oceana in Peru, they were able to create the law and pass the law of protecting the 5 mile close to the coast of industrial fishing that allowed the artisanal fishers to go out and fish, and that protected food and that area and protected food and families. I think it was 40,000 families that now can actually go out and fish and have what to eat. And I think we do say in Oceana that, you know, you could have 1 billion meals a day of seafood if you actually protect it and allow the ocean to heal, because it's unhealthy right now. But that is the potential. And I think, you know, as food is a major issue in our right now in our near future, scarcity, to not protect something that nature has given us. And once we deplete it, it's saying, if you give us a break, we will make sure we, you know, get healthy again very soon. It's crazy not to do it.
These finalists are breaking down barriers. They are inventing the future we all need to accelerate towards. But they need us all to make a change in how we invest, how we take risks, how we make bold, collaborative moves that shape the future faster. This is a call for urgency at a new level. We need to speed solutions to scale if by 2030 we will be able to say to one another that we successfully protected 30% of oceans, nature and water, and lowered emissions by over 40%. Business as usual is no longer an option. We need new forms of blended capital to help take game-changing ideas to scale. We need corporations to invest in the solutions of the future in their supply chains. We need markets to reward these incredible innovators. Together, we hold the pen of future history books.
Coming up, more from the Earthshot Prize Innovation Summit 2024. This is Bloomberg.
There is no backwards in recycling. There is no backwards in treating pollutants in the water. The trends at times of what you talk in the press may be different from one crisis to the next. My job is to go beyond crisis, to anticipate. That's why innovation. We knew we could do recycling of plastics. For years, nobody was really interested in that. And suddenly, it takes off. But we found a solution in the meantime. So in a way, my job as a chief exec is to deal with the short term and to be able to deliver essential services, even in time of crisis, as well as to see the long term and deliver good result, of course, for my shareholders. Because in a way, delivering good results now is a way to afford the future and to afford to innovate and to see the long term as well.
Names in global leadership are on Bloomberg.
When it comes to tariffs, we need to be very clear. The European Union is negotiating as a whole, so there's no room to have bilateral agreements. It's a core competency of the Commission. But speaking about the art of the deal, I think a deal can be made when it comes to the US-European trade relations.
Nobody covers the top global leaders like Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Welcome back to the Earthshot Prize Innovation Summit 2024. I'm Jennifer Zabasaja. The Earthshot Prize supports solutions to the harm brought about by the climate crisis. Earthshot Prize winners are guided by global partners and leaders on how to accelerate progress and shake up the status quo. Here's some of their advice.
Politicians have the ability in this, this football match that is the climate environment, where they can change the rules that will either speed up or slow down the game and either cause more goals to be scored or not. And one of the things that I track consistently is the speed at which we remove fossil fuel subsidies. Because not only are those incentives $7 trillion worth in entirely the wrong place, but that represents a loss of otherwise investment that we could be putting into alternatives. So that's something I keep a close eye on, as well as, of course, the trajectory for fossil fuels generally, which we must bring to an end point. The second that I'm interested in is CBAMs, carbon border adjustments, because again, we need to properly price carbon in our economies. I do think those are things that could speed up the goal scoring, but the one thing I'll also say is politicians are not the only players on the field. So every single person in this room, regardless of how fast governments are moving, can still make a difference. So do not be disheartened by the speed of the game.
By the slow speed. But that is what the Earthshot Prize is all about accelerating this. I also wanted to ask Wanjira if you would come in on this question also, because policies are important, but they will not occur if the almighty dollar is not behind them. So what do you track in terms of investment?
The role and the beauty of nature. We have literally one currency at the moment, which is carbon, but we know that forests, and especially forests on my continent, play such a huge role in keeping our planet alive, and we don't value the ecosystem services that they provide: water, pollination, soil, everything that keeps us alive. But we undervalue nature. So policies that continue to incentivize the protection of green spaces and incentivize the creation of new ones, I track.
When we look around this room, and there's a lot of hope, there's a lot of energy, there's a lot of optimism. Yet out there's a whole different world for many of us. There's a lot of fear, there's a lot of fear of crisis, of despair. How can we use the collective power and message of the Earthshot Prize as a platform to foster hope in the communities and young people that most need it today?
The best of life and the best opportunities actually are at the end of your comfort zone. Beyond that horizon we don't see. Don't be afraid to be on that horizon, because there is where the true opportunities are going to happen. I used to have one guy, Robert Egger, 30 years ago, a person very important in my life, a food fighter. He said, in terms of social change and philanthropy, that it seems that philanthropy was always about the redemption of the giver, when philanthropy must be about the liberation of the receiver. Let's start doing things to give dignity to the voiceless. Let's start making sure that we don't feel pity for the people, but we give them our respect, showing up there, creating opportunity, creating your ideas into real agents of change. I am President Reyes, and I endorse this message.
I want to stress that, of course, the wrong tree in the wrong place can undoubtedly do a lot more harm than good. But it's worth noting that is the same for everything that has ever existed. If you stick a toothbrush in the wrong place, it'll do more harm than good, so I'm told. Of course, we are not going to be getting out of this by engineering our way out of it. This doesn't tackle the underlying threat, the underlying challenge that we're facing, which is ultimately the inequitable distribution of wealth on our planet. We have a small number of people with massive environmental footprints, but then we've also got billions of people living day to day, trapped in an economy where they have very few non-extractive alternatives. But there's a growing body of research that suggests that these are the people that actually hold our greatest opportunity for hope. Because if we can redistribute the wealth of this planet towards those land stewards, they are the ones who can find the sustainable options, and then in time, the regenerative options that help to build a world in which we can all thrive. Global restoration is not about excluding people and securing nature. It's about finding and empowering the millions of local land stewards, the indigenous populations, the farmers, the communities who are the stewards of nature on our planet. And that is the mission of Restore. A free online digital platform to support the movement where any local landowner can draw around their land and get free information about the carbon and water and biodiversity. Just like Desta, this example in Ethiopia, where you can see the huge footprint of coffee production as forests have been removed. But as you zoom in, it looks like that forest is pretty much intact. And that's because that's exactly what it is. Instead of removing the forest, they plant the trees underneath the canopy of this beautiful, intact rainforest, which traps water and nutrients, so those trees grow really well without the need for fertilizers and irrigation, which means they make more profits. And when nature is the profitable option, you know you can't stop it from recovering across landscapes. That is why all the farmers in the nearby region are allowing trees to return on their ecosystems so that they can have more profitable coffee production.
Each one of you I know wakes up knowing that you're in a race against time to use your platform and your influence to unlock the future we want. And here's what I know. When you leave here now, you're going to run around the whole of New York, negotiating, agreeing, pitching, pushing, risk-taking, leading, and it is exhausting. And sometimes the no's and the inertia and the resistance you meet, they can sap the soul. In the dark of the night, how many of us have quietly held grief and fear? When we ask ourselves that question, is what we are doing enough? So as you prepare to leave us, we'd like to put some wind in your sails, oxygen in your lungs, and optimism in your hearts, because today, 15 new Earthshot finalists are launched to the world. And they join a family of 45 past winners and finalists, and all of whom have gone on to do so much incredible work and deliver meaningful change. Coming up, more from the Plaza Hotel and the Earthshot Prize Innovation Summit 2024. This is Bloomberg.
We felt strongly that there has been an opportunity for there to be an experience on mobile that is centered around gamers. Like, we talk a lot about how there's 3 billion gamers in the world. 2 of those billion play on mobile, and half of those actually play on mobile and they play on another device. But there isn't actually a gaming platform and store experience that is centered around players and goes truly across device, where who you are, your library, your identity, your rewards, that travels with you versus being locked to a single ecosystem. And we've recognized that opportunity for a long time, but we wanted to make sure that anything we built was really grounded in people who play those mobile native games and the creators of them. And so being joined with a team that has real deep expertise in mobile was important to us.
The top names in business are on Bloomberg.
We're making sure that we both get the bank to be more efficient and get it to be more simple. So that modernization and simplification agenda is very important. That also means investing. The transformation that we're doing is both addressing some of the regulatory issues that were raised, but they're also in the benefit of shareholders.
Nobody covers business like Bloomberg. Context.
Imagine if you're a startup founder, right? You have an amazing idea.
Right.
But actually getting investors to buy in, it feels like you're climbing Mount Everest.
Oh, yeah.
So SG Trader AI, this app, it might just be like your Sherpa.
Okay. Yeah.
We're going to be talking about how this thing helps startups make these awesome video pitches. The kind that really get the investors saying, yes, I'm in.
I see.
And we'll also look into like what really makes it different from everything else out there.
Right.
So what's really cool about this SG Trader AI, I think, is that it's not just about making a video.
Yeah.
It's about giving you this like edge in the whole fundraising game.
I see.
It uses AI to like really look at your startup and make sure your pitch is spot on. Now, I have to admit, when I first heard about this retrieval augmented generation framework, or RA, I was kind of intimidated. To be honest, it sounds a little complicated.
Oh, yeah. It can sound that way.
Can you maybe like break that down for us. What is that in simple terms?
Okay, sure.
And why is it such a big deal for creating a killer pitch?
So imagine you're like a chef, right?
Okay, I like where this is going.
And you've got this amazing recipe book.
Yeah.
That's like your AI model, like ChatGPT or Perplexity, one of those.
Gotcha.
Your ingredients. That's your startups data, the latest trends, all that.
I see.
In Harji, it brings together that recipe and those ingredients to make this like totally unique dish.
Interesting.
And that dish, it's your pitch script.
So it's not giving like generic advice.
Yeah.
It actually understands your startup and what investors want.
Exactly. It knows what's going to click with them.
That's amazing. So it's like having your own pitch coach who knows exactly what each investor's looking for.
Right. You got it.
Now, this is where it gets really interesting, I think.
What's that?
We looked into some of the other video platforms out there.
Okay, yeah.
Competitors like Temi, Beautiful.ai,
Right.
Vidyard.
Right.
And, you know, none of them have this AI-powered script writing.
No, they don't.
It's like they're missing that secret ingredient.
It makes a huge difference.
From your experience, how big of an advantage is that for startups, especially new ones just starting out?
Well, for those early stage startups, it's a complete game changer.
Yeah.
Because they usually have limited budgets, resources.
Tough, yeah.
And putting together a really strong pitch, it's a big challenge.
It's huge.
It's like trying to convince someone to invest in your dream without having that perfect way to say it.
It's like, here's my dream, just trust me.
Exactly. This AI tool removes that whole hurdle.
Right.
So entrepreneurs can just focus on what matters.
Building their product, growing their business.
Exactly.
I totally agree. And, you know, speaking of making things easier, I love that this is a mobile app.
Oh, yeah, it's super convenient.
Like, you just need your phone. That's it. To make these pro videos. No fancy cameras, no studio rentals. You could be, like, at a coffee shop.
And still make it look awesome.
And make it look like a Hollywood production.
It's amazing, right?
That accessibility is key, especially for startups that are bootstrapping it.
It really levels the playing field.
Yeah.
So everybody has a chance to present a polished, professional pitch.
Doesn't matter what their budget is.
Right. You don't need a whole film crew to look credible anymore.
And it's not just making the pitch, is it?
No, there's more.
SG Trader AI, it takes it a step further. It helps you get it in front of the right people.
Exactly.
They have their own live stream channel with a massive audience.
I know, it's crazy.
Over 25,000 subscribers and 100,000 daily views.
That's huge exposure.
That's insane. Plus, you can instantly share your pitch with their network of, like, angel investors, VCs.
Yeah, it's great.
To me, that sounds like a shortcut to all that networking.
Yeah.
You know, trying to get in front of investors.
It can be a real grind.
What are your thoughts on that?
Well, it's definitely more efficient.
Yeah.
In the past, startups had to do all these networking events, cold emails, all that hustle.
It's exhausting just thinking about it.
I know, right?
So does SG Trader AI really streamline that?
It does. It gives you that direct line to investors who are actively looking.
They're already interested.
Exactly. It's like having a fast pass to the front of the line.
Love that analogy.
Mm.
So it takes out the guesswork and the legwork.
A lot of it, yeah.
From what I see, SG Trader AI doesn't stop there.
Nope. They keep going.
They put everything you need. Script writing, recording, editing, even reaching out to investors.
All in one app.
All in one app.
It's pretty amazing.
It's amazing.
It solves a big problem.
It does.
Think about it. Before this, you had to use all these different platforms and services.
To do each individual thing.
Yeah, just to get your pitch ready and seen by the right people.
A recipe for a total headache.
Especially when you're already juggling a million things as a founder.
They really streamlined all of that into one easy app. That's got to be so valuable.
I know, absolutely. Having everything in one place.
Yeah.
Saves time, reduces stress.
Yeah.
Lets you focus on the important stuff, your startup.
Your passion.
Right. It's like a Swiss Army knife for fundraising, but instead of blades, it's all these digital tools.
I love it. The Swiss Army knife of fundraising.
Exactly. And it's all geared towards helping you succeed.
Now, while we were looking into all this, we noticed some competitors have, like, similar features.
Oh, yeah.
Like basic editing or investor databases, that kind of thing.
Right.
But none of them seem to offer this whole package, this all-in-one solution, like SG Trader AI.
They don't.
It's like they went above and beyond to really make something just for startups.
They did. It's a really smart move.
What are your thoughts on that?
Well, by focusing on startups specifically, they've made a product that really gets their unique challenges.
So it's not a generic video thing trying to be everything to everyone.
Exactly. It's a specialized tool made with that startup journey in mind.
You mentioned earlier that SG Trader AI can actually tailor the pitch script
Yeah,
to different kinds of investors.
that's right.
That really caught my attention. Can you give us like a real world example of how that works?
Sure. So imagine a startup, they're focused on sustainable agriculture.
Okay.
If they're pitching to an impact investor, someone who cares about, social responsibility,
Right. Making a difference.
SG Trader AI can really play up those angles.
I see.
Like how their tech saves water or helps local farmers.
So it's like the app speaks impact investor fluently.
It's a great way to put it. It knows what matters to them.
So no more one size fits all pitches. You're customizing it to what each investor values.
It's about resonating with their interests.
That's amazing.
Now, let's say you're pitching to a VC who's big on AI.
Okay, yeah.
SG Trader AI, it can look at their portfolio, what they've invested in before, and tailor the pitch to highlight your startup's AI side.
It's speaking the investor's language.
Exactly. It's about showing why your startup is perfect for their strategy.
It's like SG Trader AI takes out all the guesswork in figuring out what they want to hear.
It makes it so much easier to target your pitch.
Almost like a secret weapon in the fundraising game. As we've been talking, I can't help but think
What's that?
this would have been so useful when I was starting out.
I think a lot of entrepreneurs feel that way.
Fundraising is tough. Anything to give you an edge is huge.
It is. And SG Trader AI is a great example of how tech can help.
Empower entrepreneurs.
Exactly. To navigate all the complexities of fundraising with more, confidence.
Yeah, and a solid strategy.
Absolutely.
So we've covered a lot. Let's recap what makes SG Trader AI stand out.
Okay, yeah.
AI-powered script writing tailored to investors.
Right.
Making videos right on your phone.
Super accessible.
Direct access to a network of investors who are ready to go.
That's key.
And an all-in-one platform to streamline everything.
It's all there.
It's like they combined a Hollywood studio, a matchmaking service, and a project management tool.
All for startups. It's a powerful combination.
It is. What makes it so strong is how all those pieces work together, right?
Exactly. It's not just the individual features, it's how they create a whole solution.
Addressing those pain points startups face every step of the way.
Throughout the entire journey.
It's clear that SG Trader AI is like a potential game changer.
It has that potential, yeah.
Now, I want to zoom out a bit, look at the bigger picture.
Okay.
AI is changing so fast.
It's moving at lightning speed.
Do you think tools like this are the future of how startups get funded?
That's the million-dollar question. AI is already transforming so many things.
And the startup world is right there in the mix.
It's definitely not immune. As AI gets even smarter, it makes sense it'll play a bigger role in funding.
It's exciting, but also kind of mind-blowing to think about. For all those listening, entrepreneurs, investors.
Yeah, what does this mean for them?
What are the implications of this shift to AI-powered fundraising? Is it a win-win, or are there downsides?
Well, it's complicated. There are no easy answers.
Right.
On one hand, tools like this can democratize access to funding.
So startups with great ideas, but like limited resources have a shot.
Exactly. And for investors, AI can make finding and evaluating potential investments easier.
Saving them time and resources.
Exactly.
There's a lot of upside for both sides.
Definitely. But like with any new tech, there are things to watch out for.
What kind of things?
Could there be a bias toward startups that are really good at using AI?
You mean like startups that are good at making their data and message appealing to the algorithms?
Exactly. Almost like SEO, but for fundraising.
Interesting.
And then there's a human element.
Oh, right.
Will using AI make investing less personal?
Less about relationships?
Yeah. Will the art of storytelling, building those connections, take a backseat to data?
It's a valid concern. Trust and rapport are so important in fundraising.
I agree. We don't want it to become just a transaction.
It needs to be a balance, right?
Absolutely.
Yeah.
AI can be super useful for efficiency, insights,
Yeah.
but it shouldn't replace that human element.
Building relationships.
Right. The most successful startups, regardless of the tools, will combine data and storytelling.
Connecting with investors on a human level.
It's that personal touch.
So, as we're talking about SG Trader AI and all this,
Yeah.
one question keeps popping into my head.
Okay.
What advice would you give to startups thinking about using AI tools like this, for their fundraising?
That's a great question.
What are some key things they should think about
Well,
to make sure they're using it effectively and ethically?
I think the first thing is to remember AI is a tool.
though.
It's not some magic solution.
Right.
It can definitely help make your pitch better, reach more people.
Yeah.
But it's not going to automatically get you funding.
You still need the basics.
Exactly.
A good idea, a strong team, and knowing your market.
You got
AI can boost what you already have, but it can't create it out of thin air.
It's not magic.
So it's about using AI to make your existing efforts stronger, not replacing everything.
Exactly.
Another thing, right. Make sure you're using AI in a way that feels true to you,
Absolutely.
to your brand and your values.
Don't try to force your startup into some mold just because an algorithm might like it.
Like, don't be fake just for the AI.
Right. Investors can see right through that.
You want to use AI to show your real strengths, your passion,
That's what resonates.
not create this like fake persona.
Authenticity is key.
And I guess use it as a learning experience.
Oh, definitely.
Use AI to get better at your pitch over time.
Yeah.
Pay attention to what investors say.
Both the good and the bad.
Right. And use that feedback to fine tune your message, your whole approach.
AI can give you insights, but you have to make sense of them.
It's a partnership, not just blindly following.
Exactly.
The best startups will find that balance.
Using AI's power, but keeping their own vision. It's about finding that sweet spot.
Well, I think that's a perfect place to wrap up.
Yeah.
It's clear from our deep dive that SG Trader AI,
It's really interesting.
it's changing the game for startups trying to raise money.
It is.
It's a powerful set of tools to make a killer pitch and find the right investors.
Powerful.
But
Right.
like with any powerful tool,
Yeah.
you got to use it wisely, ethically,
I'm sure.
and always remember the human side of things.
That's what drives it all.
The human side of innovation and success.
Exactly.
So to all our listeners out there,
Yeah.
embrace the possibilities of AI,
Absolutely.
but stay true to those values that matter most.
Couldn't agree more.
The future of startups, it's bright.
It is.
And with the right tools and mindset, you can achieve anything.
I believe that.
Thanks for joining us on this fascinating deep dive
It was my pleasure.
into AI and startup
There's
fundraising.
a lot to think about.
We hope you learned something valuable to apply to your own journey.
Absolutely.
Until next time, stay curious.
Because when it's working well, you don't get sick. And in fact, you live longer lives. One of the things that pandemics do is that they make that shield visible.
Public health saved your life today, but you didn't even know it. And to a little extent, that's been a point of pride in public health. You can walk around the community knowing that you made it safer, even if nobody knows your name.
When prevention works, nothing happens. That is definitely part of the challenge, right? I mean, if you're a firefighter, you can explain to your grandma what you do. Your house is on fire, I come and I save you.
I know who you are. You're Anthony.
That's right,
That's right. I love
Public health is like, do you have 5 minutes? I can explain to you. We regulate restaurants, we regulate septics, we regulate wells. By the way, then we do maternal child health. And by the way, you know, when there's a food outbreak or a TB outbreak, we deal with it.
When I was state public health director, we had a laboratory technician who said, I've seen 2 cases of Salmonella agona in the last week. And I normally see maybe 1 a month. Something might be going on here. That's when the public health epidemiologists went out and they interviewed the individuals who had this positive. They asked them what they ate. They asked them where they ate. And the stories began to line up and pointed to a single breakfast cereal. This led to a recall of literally millions of pounds of this breakfast cereal that was causing disease across 7 states in the country. That's the public health system.
think that, like, I take care of 905,000 people.
One of the things we have to remember is that basically until the 1700s, the entire medical profession was probably a net negative in terms of health. If you were sick in 1650, you were better off not seeing a physician. Because the physician would be like, oh, you do seem ill. Here, take some of this deadly poison mercury, or would you like some leeches? 2 centuries ago, 30% of children died before they became adults. A third of your kids were likely to die in childhood. But it was also hard to live to 80 or 90.
When my grandfather was born in 1900, he was expected to live to 48 years of age. He actually lived to 84. So in the last century, we gained 30 years of life expectancy. But only 5 of those years were due to everything I learned in medical school. All the really intensive, expensive sick care things that, you want to have when you have that one rare disease. But 25 of the years that we gained in that last century were due to things that we can only solve collectively.
To me, that is the most impressive thing that we have ever done as a species.
I think public health goes deep into our history as a way of mitigating the risk of living socially.
How do you limit infectious disease and deaths? It comes down to prevention.
These are ideas that led to kind of an attention to the environment, the water supply, the sewage systems, housing reforms, the creation of sanitation departments.
It wasn't that long ago that you went to work and you might not come home. Workplace mortality was very high. We fixed that, not through medicine, we fixed it through policy.
There are just so many things in public health that work every day that we don't know are happening.
It begins with prenatal care. It begins with what we serve our children for their school lunches.
Public health asks the question, how can we prevent tragedy?
It's what we as a society do collectively to improve our health.
That's the definition of public health from the Institute of Medicine. And what I like about it is what we as a society do collectively.
No one person does public health. We do it together.
I was looking at the data, life expectancy, which is usually one of the key measures of the well-being of a society. We began fall.
You need to watch this if you struggle with getting your startup noticed. This Black Friday, seize the chance to shine. For just £200, you can showcase your startup to over 25,000 venture capital and angel investors. Submit a 3-minute video pitch and gain unparalleled exposure with your contact details included for direct follow-up. Your pitch will be broadcast several times daily for an entire month, ensuring maximum visibility. And that's not all. Your product will also be featured on our live streaming channel, which boasts over 100,000 daily views and broadcasts at least 10 times per week. Imagine the possibilities. Consistent exposure to investors actively seeking new opportunities. Venture capitalists provide large capital and strategic guidance, while angel investors offer early-stage funding and mentorship. This promotion connects you to a broad network, enhancing your chances of securing the perfect investment for your startup. Don't let this opportunity slip by. With just a small investment of £200, you can propel your startup to new heights. The submission process is user-friendly, making it easy for startups of all levels to participate. So what are you waiting for? Submit your 3-minute video pitch today and take the first step towards securing the funding and connections your startup needs to thrive. This limited-time Black Friday offer is your ticket to unparalleled visibility and growth. Act now and watch your startup soar.
Welcome back, everybody, for another deep dive. This time, we're going to be talking about SG Trader AI.
Okay.
It's this new mobile app that's been kind of making waves in the startup world.
Interesting.
You know, kind of imagine if you're a startup founder, right? You have an amazing idea.
Right.
But actually getting investors to buy in, it feels like you're climbing Mount Everest.
Oh, yeah.
So SG Trader AI, this app, it might just be like your Sherpa.
Okay. Yeah.
We're going to be talking about how this thing helps startups make these awesome video pitches. The kind that really get the investors saying, yes, I'm in.
I see.
And we'll also look into like what really makes it different from everything else out there.
Right.
So what's really cool about this SG Trader AI, I think, is that it's not just about making a video.
Yeah.
It's about giving you this like edge in the whole fundraising game.
I see.
It uses AI to like really look at your startup and make sure your pitch is spot on. Now, I have to admit, when I first heard about this retrieval augmented generation framework, or RA, I was kind of intimidated. To be honest, it sounds a little complicated.
Oh, yeah. It can sound that way.
Can you maybe like break that down for us? What is that in simple terms?
Okay, sure.
And why is it such a big deal for creating a killer pitch?
So imagine you're like a chef, right?
Okay, I like where this is going.
And you've got this amazing recipe book.
Yeah.
That's like your AI model, like ChatGPT or Perplexity, one of those.
Gotcha.
Your ingredients. That's your startups data, the latest trends, all that.
I see.
And Harji, it brings together that recipe and those ingredients to make this like totally unique dish.
Interesting.
And that dish, it's your pitch script.
So it's not giving like generic advice.
Yeah.
It actually understands your startup and what investors want.
Exactly. It knows what's going to click with them.
That's amazing. So it's like having your own pitch coach who knows exactly what each investor's looking for.
Right. You got it.
Now, this is where it gets really interesting, I think.
What's that?
We looked into some of the other video platforms out there.
Okay,
right?
yeah.
Competitors like Temi, Beautiful.ai,
right.
Vidyard.
Right.
And, you know, none of them have this AI-powered script writing.
No, they don't.
It's like they're missing that secret ingredient.
It makes a huge difference.
From your experience, how big of an advantage is that for startups, especially new ones just starting out?
Well, for those early stage startups, it's a complete game changer.
Yeah.
Because they usually have limited budgets, resources.
Tough, yeah.
And putting together a really strong pitch, it's a big challenge.
It's huge.
It's like trying to convince someone to invest in your dream without having that perfect way to say it.
It's like, here's my dream, just trust me.
Exactly. This AI tool removes that whole hurdle.
Right.
So entrepreneurs can just focus on what matters.
Building their product, growing their business.
Exactly.
I totally agree. And, you know, speaking of making things easier, I love that this is a mobile app.
Oh, yeah, it's super convenient.
Like you just need your phone. That's it. To make these pro videos. No fancy cameras, no studio rentals. You could be like at a coffee shop.
And still make it look awesome.
And make it look like a Hollywood production.
It's amazing, right?
That accessibility is key, especially for startups that are bootstrapping it.
It really levels the playing field.
Yeah.
So everybody has a chance to present a polished, professional pitch.
That's no matter what their budget is.
Right. You don't need a whole film crew to look credible anymore.
And it's not just making the pitch, is it?
No, there's more.
SG Trader AI, it takes it a step further. It helps you get it in front of the right people.
Exactly.
They have their own live stream channel with a massive audience.
I know, it's crazy.
Over 25,000 subscribers and 100,000 daily views.
That's huge exposure.
That's insane. Plus, you can instantly share your pitch with their network of like angel investors, VCs.
Yeah, it's great.
To me, that sounds like a shortcut to all that networking.
Yeah.
You know, trying to get in front of investors.
It can be a real grind.
What are your thoughts on that?
Well, it's definitely more efficient.
Yeah.
In the past, startups had to do all these networking events, cold emails, all that hustle.
It's exhausting just thinking about it.
I know, right?
So does SG Trader AI really streamline that?
It does. It gives you that direct line to investors who are actively looking.
They're already interested.
Exactly. It's like having a fast pass to the front of the line.
Love that analogy.
Mm-hmm.
So it takes out the guesswork and the legwork.
A lot of it, yeah.
From what I see, SG Trader AI doesn't stop there.
Nope. They keep going.
They put everything you need. Script writing, recording, editing, even reaching out to investors.
All in one app.
All in one app.
It's pretty amazing.
It's amazing.
It solves a big problem.
It does.
Think about it. Before this, you had to use all these different platforms and services.
To do each individual thing.
Yeah, just to get your pitch ready and seen by the right people.
A recipe for a total headache.
Especially when you're already juggling a million things as a founder.
They really streamlined all of that into one easy